demonstrates very robust project economics and has a low all-in sustaining cost, which means even at a lower price, we're generating significant margins. But with this gold price, we're really looking strong. So the gold space for me is a good place to be in, given all of the uncertainty in the world. And we're very excited at continuing to advance Cerro Blanco.
Yeah, and Jack, another thing I'd love to know, especially from you, where, I mean, you certainly have quite a background in the metal space yourself, not to mention a family background that goes back generations. Given all of that, what are you seeing in terms of how the supply is meeting the current gold demand? I've seen a lot of tightness in silver, and I feel as if in the last couple of days, I've heard maybe not anything substantial. That's why I'd love to get your opinion. How is that stacking up from what you're seeing and hearing?
It just comes back to, you know, right now we're entering a super cycle in all types of commodities. And over the past, you know, years, really over the past decade, there has been a lull in investment in base metals and precious metal projects. And now what we're seeing is the demand is starting to creep way past what the supply levels are. And therefore, we do believe that there is going to be a significant supply crunch, which then can, you know, send prices higher. But we do need to see more investment in both precious metals and base metal sector to meet this changing demand. And of course, the transition, the energy transition, silver, a precious metal, copper, of course, they're playing massive roles in this transition. And if we are to meet that demand, then we need to have more investment and more projects that are not only studied in advance, but actually they need to be fast-tracked. So there's a big focus and a lot of pressure on mining professionals, mining companies to, you know, look at bringing projects forward in as efficient of a manner as possible, but also at the same time in a sustainable and responsible manner. So there's going to be a lot of interesting things happening in the metals sector over the next, I'd say, 2 to 5 years, as we really work hard to find projects, build those projects out, and meet the demand of the world today.
Yeah, and it's especially interesting because when you think about the last year, we had gold over $2,000 an ounce. Now it's about $200 lower, yet I also see these calculations that 40% of the dollars that currently exist were reportedly created within the last year. So is there anything that you're seeing from the demand side or from the investors you talk with that, aside from the price being down, I find it hard to see, you know, yeah, sure, the COMEX, they can hammer some paper here and there. But when you look at the actual fundamentals, it's harder to see this disappearing than accelerating. Would you agree with that?
Well, I think, again, when you look at the fundamentals right now, all commodity prices are going up and they're kind of shooting through the roof. And what's happening now as well, as you look at the US dollar, and that currency is actually lowering in value. It went from around $1.40 Canadian to around $1.20 Canadian per USD. And right now, when you see the US dollar weaken, traditionally, there's an inverse relation to the gold price. So I think inflation is something that is, you know, everyone is fearful of these days as prices go up and currencies are devalued. And again, traditionally, when you look at what happens in that environment, the gold price continues to climb. So even if the gold price were to, you know, climb a little bit more steadily or at a slower pace than it has in the past, we're still looking at a very strong gold market going forward in the near term and overall in the medium term as well.
Yeah, and I mean, even if the price stays where it is, let alone climb. Although, Jack, you're running Bluestone Resources, so one of the companies that is getting gold out of the ground, going to be counted on to meet that supply. And it's nice, especially since it's been almost a year since you came on, and everything that I've learned in my time in the mining sector, see who lays out a plan, see who can follow through on it. You guys have done that. So could you give us an update on what's happened between then and now and what folks should be aware of?
Yes, there has been a lot of change since the last time I came on to speak to you about Cerro Blanco. So we've recently changed the strategy of the development for the project. We've gone from what was contemplated as an underground high grade 1 million ounce producer to an open pit 2.4 million ounce gold production capability. So there's a big fundamental change in the way in which we've decided to move the project forward. And that's really due to the success that we had in 2020 on drilling out the deposit. And over the years, we're now coming up on 4 years since Bluestone has had the Cerro Blanco project. Our understanding of the orientation of the deposit and really the best way, most robust way to extract gold and silver from this resource is through an open pit concept. So we came out with the results of that on March 1st, and now we're rapidly advancing with a feasibility study and hoping to get ourselves into the construction phase next year, which would then mean we're targeting around a 20-month timeline to get into production in 2024.
Yeah, and I appreciate you mentioning that, because as I've been thinking about where the price is, where some of the mining projects are at, if someone's of the school of thought that this price of gold and silver are going to have to go higher, I think there's a little, at least for me, a little bias towards projects that aren't in production now. So you can't be selling the metal at the current prices. But if you're 3 or 4 years out, that's something that I've been thinking about, appeals to me. Anything you could touch on there?
Yeah, well, what we're trying to do is not just as quick as possible get into the production phase. We want to make sure that we're maximizing the benefits of this resource. And really the way to do that is to understand the deposit, understand the geology, and understand the best way to produce the most minerals out of that deposit. And for Cerro Blanco, there's no question. The best way to do it is through an open pit method. And what we've been able to do is more than double the amount of gold and triple the amount of silver that we're going to be producing through this new concept. And we believe that the gold price, silver price will continue to remain strong. And once we get ourselves into production, you'll see, if you compare the economics from the open pit to the underground, it's totally a different project, and it puts us in a different realm. And because of the size, it becomes much more of a focus for the Lundin Group to look at this as a serious investment for the family, because it is much more robust, and we have eliminated a lot of the technical challenges associated to the underground development. So all of that combined, we believe that we've got the right path forward here. And that's why I'm so committed to making sure we deliver on bringing this specific project into operations as swiftly as possible.
Well, there you go, Jack. I think that's checkmate on the supposed safe haven treasury market, where they have absolutely no plan, no accountability. It's like the exact opposite of that. So perhaps just in wrapping up, if people have questions, they want to get more information, or especially Jack, I'm sure there's a lot of people who are new to mining and are just freaked out by what they see out of these governments. If they have a financial advisor that they would like to join in a call, what is the best way for people to do that?
For sure. Well, I would start by leading any prospective investor to Bluestone, to our website, bluestoneresources.ca. Of course, from there, you'll get our information, and you can reach out to Stephen Williams, who's our Vice President of Investor Relations. And if you Google Bluestone and my name, there's a lot of promotional videos that we've put on the company. We do also have a unique project adjacent to the gold project, which is our Mita geothermal project. And we're licensed to generate up to 50 megawatts of renewable energy through this geothermal project. So on, sticking with the trend of trying to be, sustainable and focusing on operational excellence, we do look at the prospect of bringing forward a renewable energy project in parallel to Bluestone's flagship Cerro Blanco gold project. So very unique opportunity for investors looking to get into the gold space.
Well, I sure appreciate that, Jack. All of that information will be in the description field below. And coming right after this video, we'll actually link to the call that you did last year, Jack, because I don't know, from what I've seen in my time in Wall Street and beyond, it's great to hear what people say. But fortunately, in this case, we have what you said last year, we have what you said this year, and people can look and see how you handle things, who's following through. Let the evidence do the talking. Nobody has to take anybody's opinion or word for anything. And I appreciate that there are people like you in this investment community, Jack, who are available to the investors. So I know you have a full day planned and we'll let you run, but thanks so much for joining me and we'll look forward to having you on again soon.
Thank you so much for having me, Chris. And hopefully next time we talk on this platform, I'll be that much closer to operations at Cerro Blanco. So looking forward to it.
Well, as will I. And again, to hear the interview with Jack and what he was up to last year so you can hear it for yourself, that video is coming your way now. Hello there, my friends. Chris Marcus here with you for Arcadia Economics on an action-packed Wednesday in the hot darn silver market. Fortunately, I am joined by my friend Andrew Pollard of BlackRock Silver to dig into some of the action. Andrew, I hear you may even stick around, take some questions as well. Is that right?
My goodness, anything can happen. We'll see.
Well, I would agree because in terms of the anything can happen zone, let me get my screen share pulled up here. Andrew, to dig in, are you familiar with an analyst named Jeff Christian of the CPM Group?
I sure am, yes.
Yeah, well, as I'm a big fan. I mean, I don't agree with many of his conclusions, but you know, as a student of free market economics, a foreign concept in North America these days, I found from my trading background that the best trades were not when, you know, let's say I think this is going to go up, you think it's going to go down, we bet, you know, and one wins. But even better than that, let's say you and I are trading, you think A, I think the opposite of A, but you've explained to me why you think that, and I see that, oh, he made a mistake in his calculation here. So, you know, along those lines, what I've always found helpful is certainly we go out, we do our research and find out what makes sense to us, but seeing what are the counter views. So I love watching the videos. Sorry, long tangent there. And but anyway, Jeff is a bit of a silver bear traditionally, although I was surprised. I mean, I don't know if this is the sign of the apocalypse, but Andrew, apparently Jeff went on to note that the market fundamentals have positioned the white metal to potentially surpass its previous US $50 highs set in 1980 and 2011. I'm about to be speechless, so perhaps you can take it from there. What do you think? Do the fundamentals support such a thing? And why would even the silver bears be saying that?
Yeah, well, I mean, it's pretty amazing to think that silver hasn't surpassed its all-time highs yet when, you know, you're seeing gold hit its all-time highs last year and looking like it's going to want to go higher. I mean, silver, when it goes, it goes. But, you know, I think, you know, even the bears are starting to get converted now because, I mean, you're seeing this narrative around retail, you know, stackers and the silver squeeze movement. Yeah, that's great. But just the utility factor of silver, it's just going to keep going up and up and up. And you're seeing peak silver's already been reached. I mean, you know, we've seen production drop in the last every year for the past 4 or 5 years, while, you know, electric car use goes up, solar panel use goes up, electrical components go up. I mean, you've got 1 billion people in the world right now without electricity that want it, and they're going to be getting it. And, you know, silver is used in everything from your phone to your television to your car, right? So it's looking good. You know, as I said, I think it's just, it's crazy when you see copper moving, gold moving, all these other commodities moving, and silver, despite it, you know, going from $12 last year to kissing $30 last year, it still hasn't gone anywhere near its all-time highs yet. So yeah, I think this is the eating's just about to get really, really good for us. And when it does go, it goes. I mean, from I think March of last year during the big COVID sell-off, it got sold down to $11 or $12 at one point, and by the end of July, it was 29. So when it moves, it moves. Those are the sorts of moves you don't really see with gold, at least that quick. So I think we're locked and loaded for a fun summer here.
Yeah, well, that makes a lot of sense to me because, especially in there, you mentioned copper, which I'll get the copper chart up, but somewhat related to copper. I was prepared in advance today because Andrew, you're running BlackRock Silver, which is going to get silver out of the ground. Just to be clear. So I would assume that somewhere in your operation, do you use this woodish looking thing called lumber? You've heard of it.
I like their chart. I'm jealous of their chart. Yeah. Lumber must have a hell of a CEO.
So, I mean, we can even back out the 5-year here. So you look early, got almost, let's see, what do we see the low? So under 300, that was last March, as high as 1,500, today at 1,327. What does that do to the bottom line of silver companies? Is that going to increase the silver? With all else being equal, I mean, we can get the copper chart. We can get 80 charts.
A chart like that is the reason why you want to own silver and precious metals, because you know what you're seeing there is a perfect visual of what inflation does. You know, that same piece of wood was always that same piece of wood that you're buying. It's how many dollars does it take? Well, you know, it's gold and silver were, you know, fundamentally, you know, a store of wealth, a hedge against inflation, a hedge against stuff like that. When you see things like lumber running, when you see corn prices running, chicken prices have apparently doubled just in the last few months, gas prices going, that's fundamentally bullish. I mean, you know, the internal costs of running a mine, you know, those all tend to move in relation to the cost of the metal themselves. I mean, oil is you know, a big one that we'd be looking at, but you know, as those costs rise, so too would you expect the metal to go up. So I mean, you're just hoping to keep that margin roughly the same. That said, for what we're targeting, I mean, we've got ultra high grade gold and silver veins, and we think it should be a high margin operation. You know, when we get to that point, just because of how juicy the grades are that we're intercepting. So you know, we're not like an optionality play.
Yeah, well, in all fairness now, Andrew, you are running a silver company. These could be economics you're using to talk your book. And here I am with the silver channel, so the same could be true. But let's play a fun little game called Pick a Commodity. And actually, I will go over to the audience tab. So anyone watching in the audience and the live chat, if you want to pick the commodity that we can look at and see, maybe if we can find the one where the inflation is contained. I see Janocula is switching to become a lumberjack. So write in your favorite commodity. Andrew, how about, as people throw in their picks, how about we take a look at copper first, since you mentioned that. We'll see if copper has been able to overcome the low inflation pandemic that's been sweeping the nation. Actually, the entire globe, as I hear it. Although, looks like copper prices are a bit, how would they say it on Wall Street, elevated. What would you, what if you were trying to, and I know you would never do anything this stupid, but let's say you were trying to think like Jerome Powell and Ben Bernanke, would you say this is transitory, as they explained at the last meeting? It seems like it's been going on this is the 1 year chart. So it's at least 1 year of transition. What would you say to the folks at home, whether this inflation craze that silver alien hunters are talking about?
Well, I'll tell you what, I mean, they're getting exactly what they want. I mean, they're pushing forward with, you know, stimulus packages focused on the electrification of society or the decarbonization of society. Well, guess what? Copper is, you know, going to be powering all the electric grids. I mean, you know, anytime you're going to be, you know, the U.S. Injecting $2 trillion into decarbonization movements, yeah, you're going to see a little push for that on the underlying commodity. You know, that's going to be really good for silver too, because I mean, once again, silver's used in all these electronic components as well. So Do I see copper getting any cheaper in the near term? No, I think it's only going to keep going. It's a nice looking, straightforward build they're doing. It's not one of those, up and down. So I think it's just going to, copper is going to be a good place to be for the next, for the foreseeable future.
Yeah, and I mean, I guess certainly if you measure on a 11-year basis, it doesn't look like that's quite as transitory yet. If you take the peak in 2011, when all of the commodities were soaring then in response to QE2 and other fraudulent central banking policies that just pump more money into popped bubbles to reinflate them again. So anyway, although I told you it was going to be a big day, Andrew. What if, despite now everything you said makes sense, but what if I saw your fine assertion and re-raised you with the new news that JP Morgan feels that what we're seeing today in the Bitcoin sector, where the prices are getting absolutely clobbered, is that maybe investors are now reallocating into gold in a dramatic change in fund flows, according to JP Morgan. Andrew, take it away, please, sir.
Yeah, well, I mean, once again, what you're seeing in Bitcoin and a lot of the cryptos is really the reason why you'd want to have something tangible like gold or silver in your portfolio. I mean, you're seeing massive moves. It's fun when it goes up, but oftentimes, it's musical chairs. And once that music stops, I mean, unless you got a chair, you're going to be hitting the floor pretty hard. And it's just showing, it's volatility. It's fun for part of your portfolio, but silver and gold, they've got charts going back 5,000 years on that. There's a utility. You can feel it, you can trade it, you can touch it, you can bury it, you can store it. It's something there. I don't think it's going anywhere, despite whatever headlines you see for the flavor of the days. Before it was weed stocks or medical mushrooms or crypto. I mean, everyone's always talking about that speculative money or the easy money. And, before it used to really be just gold and silver stories, because you could have massive discoveries and make people lots of money. But, at the end of the day, I think we've got a long way to go here. I mean, it's amazing that more money isn't flowing into silver and gold stocks at this moment, because it seems like we're at that turning point, that tipping point where when it goes, it's just going to rocket. You look at the GDXJ and the actual stock charts of the companies. I mean, despite all this inflation you're seeing, despite what's going on in the macro, in prices across the board, metals, mining companies really haven't done that well over the last 8 months. In fact, it's been an 8-month consolidation just up until the last few weeks. But it looks like it's going to change. It looks like we're turning, the tides are turning, and when they turn, they can really, really move. And I think we're just getting to that point now.
Yeah, well, that makes a lot of sense to me. And especially now that even JP Morgan's talking precious metals.
Yeah.
I wonder, now, in all fairness, I like to be prepared. I did not get to see the report yet and find out if they commented on the futures market structure that from time to time, according to the CFTC's own commissioner, tamps down the price. So we don't know how that will play out. But Andrew, since you mentioned the GDXJ, I believe it was, although, come on, Andrew, let's not tease our friends here. Can we just go to the silver indices, especially now that it's BlackRock Silver? Love the name change, by the way. And as I pull the chart up, how are people responding to the name change to BlackRock Silver?
Yeah, it's been good. I think, the reason we decided to do it was, obviously we've got what's shaping up to be one of the world-class discoveries of the recent past. And, most silver is produced in about 2/3 of silver comes from South America and Latin America. Well, guess what? There's lots of issues down there, and all the big boys are looking to get out. And we're in Nevada at this point. Our flagship project is literally the halfway point between Las Vegas and Reno. So, we're looking really, really good. We attracted First Majestic Silver just this morning to announce an equity investment in us, and that's huge. Anytime a major mining company takes a position in a company like ours, especially pre-resource. I mean, we haven't even come out with our maiden resource yet. That's a huge vote of confidence. But part of that is just there's lots of good silver company exploration companies putting out results, but the fact of the matter is, they're coming from Mexico or Argentina or Peru or Chile. Well, guess what? They're not going to if most of the major mining and mid-tier silver producers are trying to offset their jurisdictional risk. I mean, in Mexico, you're having them come after you for royalties, and you have to deal with cartels. In Peru, the second largest producer of Chile of silver in the world, they're having a presidential election in about 2 weeks' time, and the leading candidate is running on the N-word, nationalization. They're looking at leaving 70% of all mining profits in the country. Well, that's going to send some shockwaves through the producers that are there as the second largest producer of silver in the world. Chile, they're talking about raising the royalty rates too. Well, guess where they're not talking about that? That's in Nevada. So, this investment from First Majestic, who just recently got into Nevada by acquiring the Jarrett Canyon mine just last month. This is big news because they only use, their slogan for the last 19 years up until about a month ago was one country, one commodity. They were just focused in Mexico, and they were just focused on silver. Well, by coming into Nevada, that's a big shot across the bow of the Mexican government. And I think you're starting to see a similar movement from other Latin American producers. Fortuna Silver, another billion-dollar company, they thought they had jurisdictional risk covered because they were in Peru, Argentina, and Mexico. Well, guess what? Doing what First Majestic did, they decided to get outside of that region too, and they figured that Burkina Faso was a pretty good bet. So they just acquired Rox Gold and their Burkina Faso gold project. So it's interesting. I think you're going to see that with Pan American Silver. There's companies like Hochschild, another billion-dollar producer, which is down in Peru. I mean, and once again, the silver space, there's only about 50 or 60 true silver primary junior companies on the planet anyhow. I'd say about 45 of them are in those same countries that the majors are trying to get out. So, I think, I don't want to say we'd be the golden child, but we might be the silver child moving forward in terms of potential M&A targets.
Did you say the golden child?
The golden child, yes.
Oh my God. I just watched The Golden Child again the other night. You ever see the old Eddie Murphy movie?
Yeah.
Where he gets the sacred cross dagger of Valiante to save. I wonder if Sardo Numsi was like a veiled metaphor for silver bankers.
Well, in the context of Eddie Murphy movies then and what's going on in the silver space, I'd say Coming to America is probably the more apt title on this one.
Yeah, well, certainly fascinating things going on here. And Andrew, it's actually interesting. You mentioned some of the jurisdictional risk and perhaps serious somewhat comment first, which of course is not like licensed legal financial advice, because I don't even believe in that sort of thing. But I would say like when you find silver and if you have the patience to wait it out, I mean, if you don't, then I would tell people don't bother with silver. If you don't, I don't know how long it will take. I'm willing to wait. I mean, I'm fortunate now I have a business. If I sat here for the next 20 years and bought mining shares of companies that stayed in business and silver bullion, and I give it to kids one day so I think that's part of it, which is why it gets so out of line because most people aren't willing to do that. With that said, in some of these jurisdictions you mentioned, it's ironic how you have Nevada here and then you have California there. And I think most people would take their chances with any place on the globe aside from California. Although, fortunately, Andrew, a little scoop here. I know I've promised, I'm addressing some big issues in our day here, taking down the silver cartel, explaining freedom to socialists. But
all in a day's work.
I actually have someone on the California situation. And I want you to know this I'm saying this publicly, so I think a smart miner would be looking California because fortunately, I was on the show a while ago. Here's Alexander Horat. He got banned from Twitter at age 15 because he actually wrote a book solving California at age 14. As you can see, he did not go to public school. He's also the host of our upcoming show, Silver Jeopardy. He was actually asking me how to get sponsors. He wants to, move out of his folks' place. He's only 17. So he's going to be on the star also of The Silver Apprentice, an upcoming show on the Arcadia network. And one of the first assignments I gave him is to solve California legislation because, imagine if companies actually, is there actually, here's an unfair question. As a mining executive strictly, is there any jurisdiction if someone showed you a project that you would be more hesitant than let's say it's like, wow, it's the greatest silver deposit ever. It's high grade. And then they say there's California. Is there anything that could scare you more?
No, listen, mining's tough enough business as it is with everything going your way. You don't need to go to places that are going to make it even more difficult. Nevada, it's hard to beat number one. Fraser Institute does their rankings every year of top mining jurisdictions. Nevada, number one this year. Where silver's produced, the number one producer of silver in the world is Mexico by a country mile. They rank number 42 or 43 on that list. The second largest is Peru. They rank 34, and that was before their leading presidential candidate was talking about, nationalizing mines. Chile, they're messing with their royalty scheme. In the silver space, there's Nevada, and then it's a steady fall to find the next sort of place where you'd actually want to do it and be able to sleep at night. I don't have to have mercenaries take me to our site or have to worry about cartels. The only security we need is at the casinos right next to our silver deposits. So.
Well, if you want to be careful from those cartels, that's why you stay out of California. I hear the politics there are wild. Although, let's get back. No more California jokes. I know there's people who actually live there.
Rick Rule refers to California as the People's Republic of California.
Yeah, well,
I'm coming from British Columbia. It's policy-wise, we're not that far off, to be honest.
Yeah, although I'll bet on my man Alexander. Nancy Pelosi versus Alexander. In fact, I'll give odds. But anyway, well, we'll see what he would have to say. Here's the SILJ. And speaking of which, as you can see, I guess it was only started in 2012. We can take a quick look at the SIL. Before, Andrew, we're going to come back and have you ever looked at what is in the SILJ?
I haven't actually.
So it's quite disturbing, but fortunately, I'm on it. Alexander may have project number 2, but let's look at where here's the SIL.
I can take a guess as there's so few silver producers, silver miners, but.
Well, they seem to have trouble finding them too. So here we see 4740 in 2016, actually higher than that. Obviously, still well below the 2011 highs. But any thoughts on what you see there?
It was
your dog's excited. Your dog wants some silver mining stock.
Well,
mine's the same way. Nibbles, come here. We're talking silver. Good boy.
It doesn't look all that. It doesn't look all that exciting, and I understand why investors quickly sort of lose excitement because you see these big moves in silver companies, in silver prices, but the companies they just don't seem to be able to reflect that and make investors money. We've been able to do that in the past year just because we've made a big discovery. But sorry, honey. Poor honey. We made a big discovery which added a lot of value to our share price effectively overnight. But since then, it's just a rising tide raises all boats sort of thing, right? I think we're getting to a point right now where this index is going to look like a pretty good buy for if we look back on it in 3 months' time.
Well, I would agree, although perhaps far more importantly, fortunately, I do speak dog, and I think what's your dog's name, Andrew?
Her name's Honey.
Honey. Well, I think what Honey is attempting to express is her outright stunned disbelief when you look at what's actually in the SILJ. There's Pan American Silver, which, at least as I understand it, would be more aptly described as a gold major. First Majestic Silver, who I love, although I don't know if that's junior, what I think of as a junior. Hecla, Mag, Yamana. I mean, the top holdings. Well, I don't actually. Would you call any of these a silver junior?
Not juniors. I mean, these are all mid tiers. I mean, Pan American, you're correct. They make more of their money from gold than silver. First Majestic, they're silver primary for sure. They just picked up Jarrett Canyon, which is a gold mine, but at the same time, they get most of their revenues from silver. I mean, that's why they invested in us too, is because though we're silver and gold, we'd probably be about a 60-40 silver to gold split. So that'd be good. Hecla, yeah, Hecla is one of the oldest names in the silver business, certainly the oldest silver miner in America. They have a big gold credit too, but silver primary. Mag's a great story. Yamana, that's a gold company. I wouldn't really list them. Hochschild, they're silver primary, but they're in Peru. When you look at all these companies listed here, and then you break them down by jurisdictional risk and the countries they operate in, that's when things start to get really clear, especially when you know what risk those countries are facing. Pan American Silver is having a tough time in South America right now. It's pretty much every country in South America got shut down for months and months at a time, arbitrarily for various COVID, reasons. In addition to all the other risks they have with, leftist governments and tax regimes and rule of law and all of that. Mag Silver's in that same boat with Mexico, Hochschild's in Peru. Turquoise Hill, I wouldn't call them a silver company. SSR Mining, they've got plenty of exposure down there too. Silvercrest, Mexico as well. Silver Corp, China.
They're companies I'd be thrilled to own, but just to the degree of when I think of one Prime Junior Silver Miners ETF, at least what I would like, and fortunately what we've begun designing, because is something where you have a basket of stocks, that you're going to hit, if you're lucky, a small minority, whether it's 20 companies, but if you hit 2 or 3, and especially if you hit them in a rising silver environment, you will come out far ahead. And I guess one of the things really opened my eyes a couple of years ago, I was reading Doug Casey's book, where he talked a lot about how any analysis must start with silver manipulation, which was interesting. But in addition, he said between 1962 and 1968, when the price of silver went from 109 to I think around 250. Would you like to take a guess, Andrew, at that what he cited as the average multiple for the penny silver stocks?
Between what years was that, sorry?
Between 1962 and 1968.
Oh, wow.
So they went up 5x, 10x.
Yeah, I'd say 5 to 10x.
He said 150x.
Yeah.
For the average. Now, this is, again, the penny stocks. And that's kind of what I would think would be what I would be looking for in a junior index, where, then especially if you can cut out a lot of the stuff where, they may not have any idea what they're doing, but you have a management team that has done it before, legitimate prospects. So that's something we can talk more about, because BlackRock Silver is on our working or playing list of companies for a junior miner index. And one last question about the projects like this. We'll leave aside these companies they've mentioned there, but do you think should we see a silver price? Let's say that Joe Biden and Janet Yellen never stopped their hyperinflation campaign, and silver at some point nears 35 or alien hunting levels of 40 or $45. Are we going to see all this? And you can leave your company aside for the answer here. Do you think you'll see the bigger companies gobbling any smaller asset they can find?
I think you're going to see a flight towards M&A in the coming months, unlike anything we've seen in the past few years. There's so few silver primary projects on the planet that I think you're going to see a big consolidation happen very quick. I think you're starting to see that already, especially with the issues that the bulk of these silver primary companies are facing in the jurisdictions they're currently in. So the ones that don't have those same issues, those projects that don't have those same issues, look at maybe Alaska, BC, the Yukon, Nevada, Idaho, and anyone proving up some good deposits there, and can de-risk them. I think there's going to be a big, I wouldn't be surprised to start to see battles actually, where one suitor comes and then another one tries to get their hands on it, because once they're snapped up, they're snapped up. That's a big thing. When things start to go, I think money's going to flow towards the companies that have a deposit which is high grade and in the right jurisdiction. That's what we have. I mean, we've got we're drilling some multi-kilogram silver equivalent hits in our intercepts. We're proving up something that should be potentially one of the top 10 silver deposits on the planet once we get finished with this and deliver a maiden resource. Jurisdiction and coupled with high grades and growth potential, I think that's what you're looking for.
Yeah, well, that makes a lot of sense, especially in a world of negative yielding junk bonds. Andrew, any last thoughts? And we're going to grab a question or two before we wrap up as well. But any last thoughts on the deal or anything specific that is going on at BlackRock Silver that folks should be aware of?
I guess one thing they should be aware of, because I forgot to mention it thus far, is our stock symbol is on the OTC, it's BKRRF, and on the TSX Venture, it's BRC. So that's probably a good place to start.
All righty. And okay, we have a question coming in here for you, sir. Andrew, what do you think about uranium stocks, uranium mining? Because all of that electric vehicle excitement is going to need electricity. And here in Texas, we have a Texas compatriot. I'm in one of my final days in Austin, but we have a lot of unusual weather. Fortunately, the CFTC is regulating those derivatives too. But any thoughts on uranium, sir?
Yeah, I mean, uranium was another commodity that since Fukushima was a horrible investment. It's like watching paint dry, and just a slow deflation of the balloon that I guess investors were holding, and then all of a sudden it perked up. If governments around the world were truly serious about decarbonization and zero carbon emissions, uranium would have gotten a bid years and years ago, and it would have been skyrocketing then. But now it's an exciting place to be, and you're starting to see M&A competitions heat up in that regard, because there are so few true really good stories out there. So I'm aware of a battle right now for I guess over a junior company with multiple bidders trying to one outdoing the other and making higher and higher offers in Canada. I think you'll see more of that. Uranium's probably I think the boogeyman side of it's come to pass. I mean, all the data shows it's truly one of the safest means of electric production, and if that's what if governments around the world want to go towards their zero emissions policy, uranium's going to be has to be a huge part of that. So
all righty, well, I appreciate that. And Andrew Ray Wolf asks, is this First Majestic placement part of the $8 million placement recently announced, or in addition to it for a $10 million total?
Correct. It's in addition to it. So there was so much demand on that $8 million financing the other day. I mean, it was effectively placed within a few minutes. But we've had so many people under the hoods, and I think they realized that with this money we just raised previously, you know, unless we weren't prepared to take much more. You know, a lot of companies were in various sort of stages of looking at us in due diligence, but they realized this money that we just raised a few days ago put us in such a good negotiating position that unless they either needed to act fast and get a toehold, or wait until we're much bigger company, because we've got a lot of drill results about to come out. So First Majestic approached us. They said, hey, will you take this money in addition to what you just raised, even if it's just a nominal, it's over, it's a little over 1% of our float, I guess. But it's a validation. It's a toehold in us. It shows that they're committed to, they like what we're doing so far. They see the potential in something obviously much larger because it's an investment. Obviously, the reason you make an investment is to make money. But ultimately, I mean, First Majestics, they've proven from in the past that they like to acquire companies once they get to a certain size, and I think this shows the market that not only have what we've done so far in just a year's worth of drilling, check the boxes for a major mining company to want to come in, especially at this point in our juncture. But it's sort of been the warning shot to the rest of the other silver companies out there that are looking at potential M&A or acquisitions. That were now officially on some people's radars, and that might cause a lot more people to come off the sidelines. And who knows? Who knows where we'll be in a year? Our focus is on getting this resource estimate done as quickly as possible and get as much drilling as we can and get our valuation as high as possible. I'd be shocked, frankly, if we deliver anything like we expect we will on this upcoming resource that'll come out in the next 6 months. I'd be shocked if we're still around much longer than that, because what we have in Nevada, high grade silver gold, is just so rare in the silver space to begin with that I'd expect there to be a big appetite for that.
Well, that will certainly be exciting to follow. We have another question here asking about Silver Cloud. You've talked about a spin out. What is the latest on that?
Yeah. So with Silver Cloud, we finished drilling it and announced some results on that maybe a month or two ago. We're in the process of updating our technical reports. Because Tonopah West, our silver project, has become the flagship for us. I mean, that's what's that commands 100% of our valuation at this point. So we have the idea of spinning off Silver Cloud because it is a very, very compelling and prospective gold target. It's about 45 square kilometers up at the top of the Carlin Trend in Nevada, and we're getting zero value for that. Whereas at one point, maybe 2 years ago, we had a $30 million valuation just for that. What we're looking at now is there's effectively we're exploring a few different avenues. One of them is a spin out, but there's some other groups that I guess have emerged and expressed to us that they see us as being more valuable with Silver Cloud within the company. Those are potential acquirers at one point or another down the line who have expressed some interest of us keeping it in there. What we don't want is to have Silver Cloud be a distraction for us, because what we're, with Tonopah, we've hit 10 different veins now, up to about 6 kilometers of strike, pretty much all of them open for expansion. And all of our team's resources and focus and our treasury is going towards proving that up, because that's not representing an expensive treasure hunt for us. That's representing just, putting one foot in front of the other and building something that, we're quite certain of what we're able to produce. Silver Cloud would be a distraction. So if there's a way for either a joint venture to come in or a spin out or both, we're exploring that right now. We're just waiting to see, I guess, who can make us the best offer. But either way, we're going to find a way to unlock some value there, because it's a hell of a property.
All righty. Well, I appreciate that. And last question for today before we wrap up. There's a lot of them coming in, although we'll take one more, because Guts Berserk says, is selling 30% of my silver for a house a good trade? I bought 7-8 years ago. I also bought some during last years of the crash at around $12. Well, that was nicely done. So obviously, Andrew, you don't know this person's situation, so this is not legal financial advice. I'll take a crack at this one as well, but any thoughts? What might you say if, again, not giving advice to anyone, but if you were hypothetically in a situation like that, what would you say?
Well, house prices have gone up, silver prices have gone up. The question is, what do you expect to do better over the next few years? A lot of smart minds, and myself included, although I see the upside of silver going well beyond that $50 mark that even the analyst Christian we showed either
Jeff Christian of the
Jeff
CPM
Christian.
Group. That's
There you go. If things go the way that I'd expect them to, I think $50 certainly isn't out of our potential, and potentially even this year. If that happens, I think that's going to outperform any a real estate acquisition. But I guess the thing with real estate is you can use significant leverage on that. With precious metal stocks, I probably wouldn't advise about using significant leverage on that. So I think either if inflation is truly a thing, house prices should do well. Gold and silver prices should do well. I think just on a one-to-one basis, silver and gold will outperform real estate. But when you bring in leverage and all of that sort of stuff into it, then who knows? But leverage works both ways. So
yeah, and I mean, I think the thing with silver that's nice about it is that it's so far out of line, in my opinion, and it's been so far out of line for such a darn long time that I don't know. I mean, I was a former option trader, so I even still dabble with the option stuff. And actually, in fairness, I have gotten it right twice, and it's required major felonies to get screwed on that. Although I could do a present value calculation of my legal claims, whatever that might come out to. But that aside, I mean, I know like I go to an extreme risk spectrum on these things, yet in fact, bringing up some things, if I can do a group share here. Someone was saying the other night, asking about the companies that sponsor and how that works, and I guess how I approach it. And part of the reason, I don't know everybody's situation, so I don't know what's best for everyone, and I'm glad I'm not a financial planner because I don't. But at least what I do and the way I approach it, I make sure that any company I bring on here, at least someone who knows it better than me has verified that it's honest people that are doing legitimate best at good projects, not someone running a Bernie Madoff. And so if you take that approach and you don't have a crystal ball, but not trying, like, I don't look at it as like this company's the best one or this one's the best one. But hey, if I have 20 companies where I can listen to the guy who owns it talk, and I feel good, not the way I feel when I watch Goldman Sachs or the CFTC. I feel like people are lying to me. And as long as someone is legitimately trying to do their best and they know what they're doing, if I get 20 companies like that in silver and my underlying bet, if I end up being wrong about silver somehow that I can't figure out and nobody else is willing to tell me, then I'll accept I was wrong. But given that assumption, and by all means, no, I don't think people should put everything into silver mining stocks. But, if you have companies that are good in a rally that seems inevitable, that's at least how I approach it. And in terms of that fellow's specific question, I agree with what you said, Andrew, that yes, real estate is a tangible asset. So there's some value. And in a hyperinflation campaign, everything's going to go up. But man, it would be hard for me to sell silver to buy a house right now. It just feels like you still have one that's at all-time record highs. I mean, they're not tamping down the real estate prices. I mean, they've blown past, even they started dipping a little the last couple of years. And you have silver at not only half of its 2011 high, half of its 1980 high, in a world where even as Bitcoin got and all the cryptos got clobbered today, even 30,000 makes Bitcoin up 60x in the last 5 years.
Right.
40,000, it makes it up 80x. So anyway, I think there will be a time. I don't know that I personally feel we're there yet where I'd want to be swapping silver for real estate. but
No,
that is just
we haven't even had the real run yet in silver.
yeah.
It hasn't begun. I
Yeah.
mean,
The managers have not even gotten out of the dugout to exchange the lineup cards, is my belief. So I'll just keep playing around with my little silver junior miners index and other, silly things like that. And Andrew, I appreciate everything you shared here today. Anything else you'd like to mention, and also how people can find out if they do have questions about silver or the company or any of the things that you're doing? I appreciate, unlike basically all of Wall Street, you make yourself available. You didn't give me a list of questions I can't ask or anything, and I know that you do the same for your shareholders. So anything else you'd like to share and how they can find you?
yeah, no, you can, best places on our website at blackrocksilver.com, or my email is just andrew@blackrocksilver.com. Happy to respond to any questions. For anyone that's not familiar, I mean, we're one of the most active juniors in Nevada right now. Certainly within, Nevada is known as the Silver State, and it's known as the Silver State partially due to our project, the district we're in called the Tonopah Silver District. And you know what, we're on a path right now. Within the next 6 months, we want to deliver a maiden resource estimate. We only started drilling it last year, and we've got 4 drill rigs going. So what that means is there's going to be nothing but news releases with drill results between now and towards the end of the year, as we start throwing everything we can into the pot that will become our maiden resource estimate. And I think when we deliver that, that's where the re-rate happens. And people are starting to, it's just in the past month or two where people are finally starting to interpret the size potential of just what we've got our hands on here. Even just after the last news release, that was the first time the markets finally started to get it. But now that they get it, now that we're getting this huge investment and that technical validation from First Majestic coming in, I think it's going to be a fun summer as we build towards the resource. And I think you're going to see lots of people coming in on the sidelines to get in before we release it. So take a look, as I said, BRC on the venture and BKRRF on the OTC, and take a chance and enjoy the ride. I came into this as a shareholder. I'm one of the largest shareholders, and what we're doing is we're trying to add as much value as we can before someone comes knocking and we can't say no. So I think we're on the radars now, though, and join us, won't you?
Yeah, and Andrew, I'll tell you what, I may, on my way south of the border here, I may swing through Nevada. So perhaps I will come knocking and check out the silver mine for myself. Would be a lot of fun. So I appreciate everything you shared here today. Thank you for taking some questions as well. And we will wrap up for now. Although in just 57 minutes, don't go too far away, because one of the representatives of Wall Street Silver is going to join me, Lee Justo, and he's going to come on and share his feelings about Dick Hayes and the LBMA and some of the other fascinating things that are going on, and whether silver squeeze was just a trending keyword, and or whether there could be more of what we've seen. So Andrew, thank you again, my friend. We'll look forward to following all the events, and check in with you again soon.
See you soon. Thanks for being here. And if you go to Nevada, I'd love to go down there with you. So we'll see.
All right. Sounds good, my friend. That, and you're looking here and saying, oh, price only moved a penny, nothing happened. Yet this is why we look beneath the surface here in Arcadia. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, as we continue on our coverage of the silver market, and certainly a spooful day, as we will dig into with that and some of the other action that is happening in the silver and political world. Apparently college is soon about to become free, so you're not going to want to miss the breaking story on that one. But with that said, let us dig right in. And to start with, we do have news from Silver Sands Resources, who I might add is bringing you this video tonight. And fortunately, they had some good news, because Silver Sands Resources Phase 2 drilling discovers new high-grade zone at Eli Central at the Virginia Silver Project. And they are pleased to report the discovery of a new high-grade zone at Eli Central. Every silver mining stock investor's favorite words. down in Argentina included 20 diamond drill holes totaling 3,104 meters. And you can see a recap of the drill results that they have down here. Or you can click to actually go to the press release in the description field below, where you can find out more about what Keith describes here as phase 2 drilling has confirmed our hypothesis that drilling known veins along strike will result in an expansion of the current resources and define the Virginia project as a significant silver project. As a result of spectacular assays, we can now see the potential for Eli zones to extend over 1.3 kilometers along strike length. And you can find out more about that. Again, Silver Sands Resources. I don't know if that is suitable for you. So this is information from one of the kind sponsors that brings you the show. And I thank you, Silver fans, Silver Sands, to bring the news to the Silver fans on a day where the only other person would have been great to hear from would have been Rostin Benham of the CFTC. Looks like the price and volatility has been controlled right along the 28.20 mark, as you can see here. Interesting pattern because red yesterday, green today. So really, if you had just owned physical silver mining shares and gone to sleep, taken a nap, hit the beach or something fun, you wouldn't even notice that the price has changed. Although if you were trying to outgame the Wall Street casino and you didn't know that they rig the price on a regular basis, you could have gotten stopped out here, there, or there and gotten JP Morgan out of your position somewhere along the way. Now, whether spoofing is an exact part of the CFTC futures market structure, I'm still waiting for a resolution from the MRAC subcommittee. I might add, I did go through all 4 hours and 50 minutes of that incredibly silly and boring charade that the CFTC put on. You could see it for yourself if you're really sadistic by going to YouTube and CFTC February 23rd. I wrote down some notes. I got to bring you the highlights. I wouldn't want to assault anyone with listening to 5 hours of that complete Keynesian lawyer gibberish. But I have to say, as I was listening on 2.5 speed, I think if I had to choose one favorite highlight, aside from the support for the Marcus proposal, which, is just special, I loved every time they were doing a vote and they asked JP Morgan's Marnie, whatever her name was, how she was voting. And you'd hear JP Morgan votes aye, JP Morgan votes yay or nay, setting the policy. It's kind of funny. I used to joke about, is the CFTC controlled by the banks? Now we see the banks actually set their market policy and they show you on video, as you saw the other night. And another great reason to hit that subscribe button and the notification bell right down there, because you never know when more might be coming your way. So with that said, there's the chart. Very extended periods of controlled volatility versus uncontrolled volatility. I don't know if the price is being tamped down at the 2840 level or what would be the correct terminology, but surely the transparency of the CFTC will shine like a bright light anytime soon, clearing that up so that the silver investors that aren't part of a bank that gets to vote on the CFTC's market structure policy can have a chance to see if silver can ever break $30, or if that actually is a governmental decree that it is forbidden. I can't wait to find out myself, but let us continue on here. Because as our title indicated, interesting chart here. These numbers have shifted a little bit in the last few days, but still you get the idea. I was pretty surprised when I saw this the other night from Nick Lard's Gold Charts Are Us. So here on the top, COMEX registered eligible total, and then iShares. So between COMEX and iShares over the last 4 weeks, let's call that 12.25 million ounces have come out. Now, I think many times in the past, we've seen silver go in and out of somewhat uniformly across all of the silver or quasi-silver avenues. Yet here you see in the Sprott Trust at that same 4-week period, 7.159 million ounces added. Amazingly, people are actually giving their money to Deutsche Bank for their silver trust, even despite Deutsche Bank bragging about smashing the price with UBS, HSBC, and others. So go figure that one what you will. But this is the kind of thing that, you know, when you just look at the price of a fraudulent COMEX spot index, that means nothing. Is probably going to get absolutely destroyed by the competitor. That will be hitting the market soon and showing people actually price you can get silver at, not paper. But if you're looking at something like that and you're looking here and saying, oh, price only moved a penny, nothing happened. Yet this is why we look beneath the surface here in Arcadia. Because here, look, there's no inflow, but I would suggest that this is telling of something. I would suggest it's telling of perhaps the word getting out about the Ponzi scheme that these guys are running. I will call that speculation at this point. I can't prove that or know that for sure. Although it does remind me of this brilliant sentence I read in my new Code Breakers book by David Kahn. I've cracked page 100 now. This baby's about 1,000 pages. And it's hard to understand 99% of what he's writing. But every once in a while, I come across a sentence I can handle. And just as I've been thinking how in trading, I mean, I come in and explain as best as I can and say, hey, here's what I'm seeing. Here's why I'm seeing it so people can understand it. Yet something that sometimes is fun or refreshing, and hopefully this will make sense, is that at least in my own trading, I don't have to know things 100%, because it's sometimes when I make a decision for myself, and this is why maybe I'm not a financial advisor, because it's easier for me to take risks with my own money where, you know, I can use my intuition maybe more than somebody else might be able to use my intuition. I encourage people to use their own intuition. By the way, speaking of which, another sidebar here. I did talk to David Smith on Sunday night. He said his intuition was telling him something, and then we saw the thing jump up twice in the next 36 hours. But anyway, I think that's part of it. And what David Kahn mentioned in the Code Breaker book was, as people are breaking codes, that if you are able to get away from needing 100% confirmation of something, it does allow you to get farther in some cases. Maybe that does or does not make complete sense, but maybe it does. So who knows? So anyway, I don't know exactly what this means, but you know, if we were to continue seeing this, certainly is possible that it could be an indication of people realizing the red flags that are associated with a silver trust like SLV, where if you call their their helpline and say, can I see the audit? Or how is it that JP Morgan downgraded silver on the day SLV took in a record-setting amount of metals? Actually, I know I talk about that a lot, so let's pull it up while we have the chart here. Let's go back 20 years, because see this big spike here? That's not even silver squeeze weekend. In fact, let's go right there. See this one where it's almost 60. For SLV, it was over 60. That was just February 2nd alone. See, this is the first one's January 29th and February 1st. So the day the price of silver got tamped down and avoided a catastrophic outcome that Commissioner Benham of the CFTC, which has its policy voted on by JP Morgan and Goldman Sachs and Citadel. So the day after the CFTC, that has their market policy voted on by JP Morgan, Goldman Sachs, and Citadel, launched a silver investigation, that was when the price began getting tamped down from the $30 mark. And then right here on January 2nd, that's when JP Morgan downgrades silver at 4:59 Eastern in the morning. They allegedly add the greatest chunk of metal in history. See, if we go back 20 years, so you had these three. This one was slightly over 20. So on the day that the inflows were insignificant, according to Jeff Curry of Goldman Sachs, it's actually record setting according to real data. which Goldman Sachs apparently doesn't give out to their customers or the public when they say things that are flat out untrue and most likely intended to deceive when they were said. But there, in either case, you can see 60 million shares added, which blows away anything else that we have ever seen in history, in the history of the Silver Trust. And but it was just a small inflow, and actually, I might add that a couple months later, the LBMA, after they said that they were running out of metal, they said actually they overcounted by 116 million ounces, which leaves the question if JP Morgan ever actually did add that. Again, when iShares can't produce an audit for their own trust, it leaves a lot of unanswered questions. And perhaps in summation, maybe that's one explanation for why the price of silver stayed flat today. Yet over the past 4 weeks, you see metal coming out of SLV while it is simultaneously going into the PSLV. So go figure that what it is. Here's another stab at it. I thought this was pretty nifty because the Chris Marcus letter to acting head of CFTC, Rostin Benham, to remind him of the implications of what he said in an interview, describes a smoking gun that has made a loud bang in the precious metals market. Well, Dan Joubert, I certainly appreciate that you've taken notice of that, and it seems significant to you as it does to me. And I would say most of the other analysts and silver mining stock executives that I sent it to date, aside from that the CFTC on February 23rd was expressing their support for the Marcus proposal, so far in terms of the evidence I've submitted or the questions I've asked to Rostin Benham of where the CFTC got the authority to control and tamp down the price or build a market structure that is voted on by banks like JP Morgan that allegedly paid $920 million for rigging the precious metals market. Yes, so we'll see. Because while I agree with Dan, these are the kind of things in the news that can easily get lost and float away. So certainly, if I were just going to go be a fisherman or something, I don't know if this one would go away, but fortunately, I'm just going to sit here, hang out with my dog, drink an IPA tonight that I picked up yesterday, and write down some of the clever, funny, smart-ass ideas I have to continue getting this message out there so that it will be loud enough that it could even wake up a CFTC commissioner during nap time. Oh, is this guy on fire tonight or what? So anyway, speaking of CFTC, though, hey, let's not just always be picking on them. I mean, there's two sides to every non-silver quarter. And in terms of the CFTC, oh my God! Now, actually, this one I am concerned about because I didn't hear back from Jeff Curry of Goldman Sachs yet, but I think I had a pretty good case. I mentioned that in my letter to the CFTC. I also tweeted it out, which is obviously the way things are officially done these days, and asked if people thought I was worthy of the whistleblower award, given that I'm the only one I know of who has sent a detailed file to the CFTC. I mean, maybe there are others, but the CFTC has not been able to explain that little 10% drop-a-roo on the record inflow days. So I'm thinking I got a good shot for this whistleblower award. Although I want to get the money before the price of silver skyrockets, which was bringing me back to my asset-backed commercial paper days right out of undergrad at Moody's, where it was nifty. They would create these shell entities made more popular by Enron and the banks during the subprime meltdown. But they would basically securitize any sort of asset, which it could be if you had accounts receivable, maybe companies owed you $100,000 and you'd get 90 in cash now. They had, it was nifty. They had lottery receivables, so it was securitizing the future streams. They even had receivables from the people who won the cigarette settlements. So I'm thinking, what if I get Goldman Sachs? I know Jeff Curry could do it. I mean, if there's anyone who could handle this, it's him. to create a securitized vehicle so I could front load my payments now. I don't know how much I'm going to win, but at least get it now so I can buy some silver. Because as you can see here, the CFTC whistleblower program in peril over potential 100 million plus payout to an ex-Deutsche Bank executive. So look at that, finding the banks to give it to one of the bankers. Maybe if oh shit, I should have put that I did an internship at Merrill Lynch in 2004. Maybe that would have qualified and moved my application to the front. But it gets better though, because despite how it appears to be based on a percentage payout, somehow they've managed to turn this into Social Security because they're on the verge of going bankrupt. Dodd-Frank enacted said whistleblowers could collect between 10% and 30% of the penalties or statements reached with companies accused of financial. The 100 million CFTC cap didn't anticipate that a single award could exceed that amount. But if they're just getting the 10 or 30% of what the bank has been fined, why does that affect any other case? Now we will pause and wait for the CFTC's response. Come on. Somebody sing the Jeopardy theme song in the background. Oh, David Covell. This is the guy that helped Daniel Shack get JP Morgan to write him a check. And I have my team on David's hotline finding what did he say so that we can say the same thing and get an even bigger check. Here, a lawyer for ex-Deutsche Bank whistleblower said his client paid a very high price personally and professionally in helping the government's investigation around 10 years ago. Cool. Well, I left about 10 years ago, so I seem to be in the right ballpark here. Yet somehow the CFTC has managed to blow the money and go on the verge of bankruptcy. And of course, how are they going to respond? By reaching out to Senator Grassley saying it's an emergency. So they're going to tax the people that they help the banks steal from in the silver manipulation and other crimes to raise the cap. And then it's going to get taken up by the Agriculture Committee, which oversees the CFTC, which seems certainly bizarre on the surface of it, why the oversight for the CFTC is the Agriculture Committee. But folks at home, let's look up the Agriculture Committee and start sending them that Rost and Benham letter. So at least when they're analyzing whether it's worth taking another $50 million from honest people who pay taxes to give it to a fraudulent agency that already has been running some form of Ponzi scheme, I'm sure that's something that a bipartisan policy can really restructure and avoid catastrophe, Democrats and Republicans alike. So there you go. In fact, speaking of political issues, you're not going to believe this. I mean, this one was stunning because right on camera, they caught looters stealing trillions of dollars, which really could help balance the budget. I mean, look, they're all standing there right on camera. You can see as the theft is going down. I'm not sure if any CFTC officials were present at that meeting, but again, I am just passing along the news. And I know you're thinking, all right, there's no way Silverboy could top that one, which is a reasonable enough assumption. I mean, I got up a little early today. What can I say? And I have another big story. Apologize. This is actually a little bit old news. I was getting ready to address this next one. And that was when my mom was visiting. And I was also documenting the evidence of how the CFTC either condoned or was actually a complicit to price fixing in the gold and silver markets. But obviously not to be missed is that I did get a shout out from Jeff Christian. Peace. Yeah, baby. And I love the phrasing here. This is possibly the greatest video I've ever seen, not just on YouTube, but I would say it goes as far as to say in the history of film and video, could the Atlanteans have done something greater than this video by CPM Group? I'm not really sure, even if they did levitate the pyramids into their current organizational shape. But partly, one of the special things here, and don't worry, I'll cover it because I know the video is amazing. You guys have been asking for my comment, and I will deliver that. But first of all, to see a headline from Jeff Christian himself that Chris Marcus and his crew reached out because obviously you know what that reminds me of.
Assemble your crew. I'll be outside.
And I did invite him to the round table. That part is true. There were a few things in the video that I'm not sure were quite how I remembered them. I mean, it was like almost, I didn't know what the guy was going to do next.
This bores me. Is anyone up for a game of basketball?
So there you go. I mean, I know sometimes you guys say the silver market looks like we're watching paint dry and it's not exciting. I think that this would certainly be proof to the contrary. And like I said, you know, an issue this important deserves full coverage, which is forthcoming. So anyway, but back on to more important news. A press release recently, again, I will apologize. I feel foolish. April 6th, here I am recording May 18th, but the CFTC did put out an announcement cautioning the public to beware of trading based on internet hype. Watch out for that. It could be anywhere, especially here, because many traders, including experienced securities investors, may not fully understand the differences or risks associated with futures trading or buying a physical commodity such as precious metals. Touche, because certainly in the past month, there are plenty of risks that I had no idea about, especially the MRAC committee. I love MRAC, and I love saying it like MRAC. All these great barometers. It's too bad we couldn't get a cooler name than CFTC that would sound like MRAC. Gotta love bureaucracy here in the USA. Few quick ones before we wrap up. I know you're tired of the CFTC jokes, but they're kind of funny. Anyway, let's see. 17 million in revenue, 5.4 billion in losses, up for Credit Suisse. Resulted in over 300 times leverage in the wrong direction. Wow, what did they have Jeff Curry hedging their SLV shares for? Yes. So anyway, seems like these numbers keep growing. There's Kevin Spacey in the movie Margin Call, which we did not watch as a team yet, although I'm still on board because I think the Margin Call could be coming any day now on a lot of this nonsense, but we'll see how much longer the government officials sworn to protect their citizens and investors will help facilitate pushing the crime under the rug. But hey, fortunately, you can't expect the government to stop rampant financial manipulation, despite many politicians campaigning on cleaning up Wall Street. When Joe Biden is busy considering a rule to cut down the nicotine in cigarettes, I didn't actually read this one, I'll be honest. I don't know if they're going to cut down the chemicals that are put in the cigarettes in addition to the nicotine. In fact, I heard a podcast a couple of years ago on a nootropics show where the gentleman was saying that when a cigarette starts burning, 7,000 different synthetic compounds get activated, which, at least according to that guy, and hey, I'm not a Harvard-trained doctor or anything like that, where they, I'll leave that aside. But it sounded like, from what he was saying, that it was more the chemicals that Philip Morris puts in there than the actual nicotine. But obviously, Joe is on that. But Hercules Biden, how does he do it all in one day? Because at the same time he's raising the chemical to nicotine ratio in the cigarettes, they're also diving into a plan for free college for all. I mean, there you go. It's like generosity to propose making 2 years of community college free while he lets his citizens pay for it, right after exposing them to risk by using them as poker chips in nuclear collateral while threatening Vladimir Putin. So there will be books written upon this administration, and the unique brand of diplomacy that we are seeing here is certainly history making. And perhaps the only way to wrap that up is that if this doesn't make you want to run out and buy treasuries, well, that may be difficult for most people to understand. you may enjoy instead learning about silver sands, whether you invest in it or not. You're going to have to make that decision. But if you'd like to know more about the guy running it, well, mi amigo Keith Anderson is coming your way now.
Hey everyone, we are live. This is Liberty and Finance, and I am your host, Elijah K. Johnson. We are live with GoldSilver Pros, Robert Kientz. Robert, thank you so much for joining us today.
Elijah, thank you for having me back on the program. I appreciate it.
Definitely. It's great to have you, and we really want to get your perspective on the rally we're seeing today and really the rally we've been seeing in the metals since the silver squeeze. We had you on about 2.5 weeks ago, silver squeeze, May 1st, silver squeeze 2.0 on the 10th anniversary of the crash we saw in 2011. A lot of people were piling into the physical silver market on that day and continue to. And we had you on last time because we were looking at the market open and we were saying, well, is it going to pop like it did on the first silver squeeze? And it didn't. But you were saying that it's going to be a delayed response in the market. And that's really what we've seen. Since we last spoke about 2.5 weeks ago, silver is up about $3. What do you make of what is happening today and what has happened in the last few weeks for the silver market?
Yeah, so just to recap from the silver squeeze 1.0, just going back to late January, February, when a lot of the Wall Street silver and the retail silver investors came in, they came into SLV and other derivative products. And SLV is a price indicator for the COMEX market. When people see inflows in SLV, it tends to affect the price of the futures market, which is really what determines spot along with the London OTC. So I think the first silver squeeze, we saw 110 million ounces in 3 days, move over into SLV in terms of demand. And that caused a noticeable increase in the price of silver until the following week, a lot of the ounces came back out. And what I and a lot of other commentators are saying are, if you want to get derivative exposure to silver, it's okay to go in SLV, but it's not, you don't have direct access to silver. And we were telling people, a lot of us were telling people, commentators, hey, if you really want silver, go get the real deal. So there are alternatives to it. You can buy the physical. Of course, we saw the premium spike on physical, and I'll get into the high premiums here in a moment, if you don't mind. They're really high today in particular. But we also saw that trade come into the COMEX, and people were taking physical off the COMEX. So since the last 3rd of February, there's over 40 million ounces actually taken out of COMEX vaults. So there's been a run on physical silver, and that was really wave 2. We said that it was going to take multiple waves for this silver trade to finally play out. And I think it may be between 3 and 4. I think we're right in the middle of wave 2. And that is where people are actually going from the derivative product into physical silver, whether it be buying at retail. Big guys are going to COMEX. Some people are buying PSLV, which is the Sprott closed-ended fund that has access to physical silver. I believe that's over the number on the Sprott as I look at it. They're over 143 million ounces. It's almost 4 billion total net asset value now in the PSLV. So lots of physical demand going into silver. I think there may be another wave or two coming. I think the third wave will be movement into the heavy 1,000 ounce bars. We've already seen that premium start to rise. And I think that'll be third wave. And then I think we'll get even tighter in the silver market. And I think the fourth wave could be when we have some sort of financial crisis and you have incredible investment demand. However, I think by the time we get to the fourth wave, most of the actual available physical silver is going to be gone.
Now, with respect to what we're seeing happening in the markets right now, kind of on a technical level, silver is breaking above $28, which is, a key level. What is your perspective on where we could see silver go from here?
So what we like to do on our channel is look at the technicals. And what I've seen since last August is sort of a range trading market in silver, but there was a bull flag pattern. And what that basically means is silver had been capped straight line across at about 29.50 and hadn't risen above it. But the base of the price since last March all the way to, I want to say this March, over a year, have been rising. That's a consolidation pattern, meaning people are consolidating, they're taking their profits on silver, but overall it's very bullish. There was a secondary flag pattern that started then in July to this August, which was an even sharper pattern. And that's been followed up since December, a head and shoulders pattern. What a head and shoulders is when you have a rise and then a higher rise and then another rise. And we just got the formation of that shoulder pattern today. All of those signals I just talked about, the two bull flags and the head and shoulders, are extremely bullish. To see those come all together on the technical chart since last March, 1, 2, 3, means that I think that has been a tremendous consolidation pattern since last year. And I think it means from a technical perspective, I'm looking for silver to break out. And silver indeed has broken above its 250-day moving averages. It broke above its 50-day moving average in April. And in May, it's continued to climb. So today we're about the mid-20s in silver, not quite the mid-20s, but almost. And it is in a bull run right now. Now, how far that goes, we'll have to see. But I suspect over the next 5 to 6 months, we're easily going to break through the 30 mark. And once we do, it should run up to 32, 33, 34 pretty quickly.
Now, some people have been calling for like $50 silver if silver breaks above $30. Is that a possibility in your mind?
It is a possibility. Now, Elisha, there are some longer term resistance point. I'm going to go to my chart on the long term. One of the things I do, I have a stock charts view of silver, and there is a really heavy resistance point at $30. That's like the line at which they don't want it to cross. Some of the market traders don't want it to cross. That's where people will take their profits and sell. And then there's a line at 32 and 34. And then there's not really another line until we get to 42. But each of those are weaker because they only occurred basically in the run up to silver's previous all-time high of $50 in 2011, and then on the way back down. So though, as you get higher and closer to $50, they're weaker lines. Now, they still are psychological lines. As it crosses 30, 32, 34, 42, you're going to see resistance. You're going to see some selling and some profit taking. But I do think once we pass that $30, $32 mark, there's a lot less resistance to get it to 50 than there is to get it above 30. Getting above 30 is that main psychological point that we've had basically dating back to late 2011.
And again, for our viewers just joining us, we're with Robert Kientz of GoldSilverPros.com. We're live today as we watch silver break above $28. Robert, did you want to kind of share with our viewers, like what portion of this move we've been seeing today and also in the last couple of weeks? It's really $3 up since Silver Squeeze 2.0 on May 1st started. What portion of this move do you think is really due to the Silver Squeeze movement?
I think a lot. So if you look at premium today, I was looking at American Silver Eagles, which is sort of like the de facto in America or North America, the de facto silver barometer. And premiums were as high as over 50% on American Silver Eagles, several issuances, not just 2021s, but previous issuances on some sites. And it was averaging anywhere from 38% premium to over 50%. Because we have a tool, Exploring Finance and I put together a tool that basically scrapes common retail websites every day, a couple of times a day, and posts those prices. And we're looking at exorbitant premiums on American Silver Eagles. And even if you go to rounds and bars, the premiums are very, very high. That means there is a really strong shortage in that retail market. And again, we're starting to see the prices on 100-ounce bars and 1,000-ounce bars start to creep up too. So you're seeing that start to work its way more to the industrial side. And a lot of that, again, has to do with it's coming off of COMEX. I want to reiterate, since the last 10 days or so of February to now, over 40 million ounces have come off of that COMEX, and it's being absorbed into other funds. A lot of those ounces have gone to PSLV, and a lot of it's just been bought out. I think it's been bought out by manufacturers looking for silver because we have overall silver scarcity. And I also think the investment demand's piling on to that. If you remember, I think I mentioned this on the last show, November last year, the Silver Institute put out a report that they expected industrial demand to drive silver another 100+ million ounces this year to over 1 billion for the first time. And that was before the first silver squeeze. And now not only do we have that increased 100+ million ounces of industrial demand, we have it in the retail sector as well. There's a lot of pressure on physical silver stocks right now. And we didn't have a lot of available above ground silver. It's different than gold. Most of the silver ever mined is now being put in industrial applications. And there's just not heavy stockpiles in a lot of places.
You mentioned the shortages developing, and this is something that Andy Scheckman, the president of Miles Franklin, talks about, is how it's getting harder and harder to source product. And we still have it, obviously, but it's getting harder and harder. And one of the interesting things about the paper versus the physical market is that on the paper market, there's more ounces traded than actually exist on a physical level. And this viewer is wanting to know. Rainbird Robert is asking, Rainbird is wanting to know what leverage ratio exists on the LBMA silver market.
I've seen it as high as 100 to 1 or more, and it's a somewhat difficult question to ask, because as a lot of traders will tell you, and I have a lot of traders write me, when they trade, they'll trade multiple times a day. So people get in and out of contracts multiple times a day. Whatever exists at any particular moment, though, it's very highly leveraged. So I'm going to go look at the volume data for today at the CME Group, which is the website you can look and see. We had open interest of 61,000 contracts and deliveries of 186. So you divide those numbers out for May 14th data, which would be Friday's data. What's 61,000 divided by 186? It's a huge number. So right now, that derivative trading is much higher than physical. We have, however, this month had, if I look at the COMEX reports, so far we've had delivered on COMEX 7,069 cumulative silver contracts of 5,000 ounce silver, which is 35 million ounces. So deliveries, but the thing that's changed here, Elijah, in the last couple of years is that the COMEX has become a delivery market for both silver and gold. It was really set up to be a hedging market and mostly a paper market, and it's been that way since it was created. But the last few years, we've seen a lot more deliveries in both silver and gold. And I don't mean deliveries just from one participant on the exchange to the other, but silver actually coming off. And that's been a big change the last few years. And so the physical deliveries are playing a much bigger part than they ever have. The derivative price still rules the day, though. If we look at the COMEX data, the volume data for today, the settlement data, we had 83,000 contracts today, close at 28.27, another 5,000 close just over 28.3. So most of those contracts are settled in paper. It still controls the price. But when you have so much physical delivery and you have that pressure in the retail market, people are starting to figure out there's not a lot of real physical silver around. And that's why we're getting the premiums.
And when it comes to really the physical silver market, I mean, the thing is that, the paper market, there's more ounces traded than the underlying physical, but is that actually unique to the silver market? Isn't that, some people say, well, that's just how all, futures and paper markets actually work. So is that something unique to precious metals?
Well, when I passed my Series 3 license years ago, I was working at a Forex broker. The government issued training basically said the original reason for commodities markets to exist was legitimate hedging. So if you're a farmer or a metals producer producing, you want to hedge your downside risk to the price before you get it to market. If you're somebody manufacturing a product using that input, you're hedging your upside price risk because your cost could rise. That's what they teach you. But if you look at the actual trading, it's much, much higher in the paper. So yes, it's for the longest time been a paper decided market, but the original intent was legitimate hedging. Now that being said, yes, the paper does rule the day, but I think the physicals are starting to take over a little bit in this market. And I think the paper scheme over time is going to come under a tremendous amount of pressure. And I don't think it's going to last too much longer. There are signs that people are wanting to move away from some of these Western markets because of the leverage to the paper.
Now, for those, again, just joining us, we're with Robert Kientz of GoldSilverPros.com. We're looking at the silver market, and we're seeing how it's popping today above $28. Now, Robert, we were talking before the interview, and you were saying how one of the reasons is actually inflation. We're seeing more inflation now. Did you want to kind of unpack that, why inflation has been bullish for silver and kind of your expectations for inflation going forward?
Yeah, so for the last 2.5, 3 months on my channel and in my newsletters, we've been warning people that inflation is coming for real, because we've been seeing the commodities index really pop up. We saw the Bloomberg commodity index pop up very strongly, and it reached the previous inflation level before coronavirus started. And that's before all of the economies have opened. And that was a signal that when everything fully opened, inflation was going to pop. And then just last week, it was announced the official CPI numbers were 4% year over year, April to April, April 2020 to April 2021. That's about double what the Fed is trying to manage in terms of inflation in the economy. And it's an astounding print. Nobody was thinking 4% CPI. That's an amazing, we haven't had 4% CPI, and I don't remember how long. And a lot of people will complain about the government numbers and say they take certain things out. And I agree with that. I wrote a whole chapter in my book, Drop Shadow, about the government numbers. That being said, if you get a 4% inflation print in the CPI, that's major. And that, I think, is driving people into the precious metals, especially silver stocks that are so thin, because from investment demand, you want precious metals in times of inflation, gold and silver. Silver is the poor man's gold. From an industrial perspective, if you're seeing that inflation come through the commodities complex, you want to get your physical commodity before that price rises. And that's not just silver, that's the entire commodities complex. People are probably trying to secure the energy stocks like oil and natural gas who have spiked. We've seen lumber spike. I mean, everybody's trying to get their commodities because of this inflation. And I think the second thing that is causing people to go into silver has to do with the LBMA. The LBMA came out recently, very recently, and announced that it overstated their silver stocks and their March market in London and their March numbers by 3,300 tons. It's over 100 million ounces. They had overstated, and they claimed it was just a mistake by one of the depositories miscounting. So they corrected that here a little while ago. And that took ended up being a phantom 3,300 tons of physical silver off the market. So when that happens, when you take 3,300 tons off one of the major Western markets, all of a sudden you're going to start to see that silver price rise. Why? Because you have less physical silver. And that's another signal to people they need to go get their silver. So because of inflation and because of that 3,300 phantom tons on the London market, I think that's really what's affecting the silver price.
Now, on the topic of inflation, and we're also seeing, the national debt increase at an unprecedented level. Now, Jerome Powell has actually spoken recently about this, and he was saying how, yes, the current rate of growth is unprecedented for the debt, or not so much unprecedented, but that it's unsustainable, right?
Yes.
But that eventually we could get it under control. What is your perspective on that? That maybe it's just we need to have more debt right now because the economy is weaker. But once we get the economy running, it's not going to be an issue. Your perspective on that?
Well, we live in a debt-based fiat money system, which is not tied to gold, hasn't been tied to gold since 1971. So what people need to understand is that debt grows, relatively speaking, in a fractional reserve system about 9 to 10 times faster than the actual currency supply. And currency spiked last year. About 40% of all currency printed in the history of the United States since 1913 was printed in 2020 in response to the pandemic to keep the economy afloat. So 40% of currency was printed. How much of that debt was created in that same time frame? Because debt is a multiple of currency. So we have spiked the amount of debt that we have. And I think they're at a point past no return. If you look at Kenneth Rogoff's study, once you get past 90% of GDP, a debt to GDP ratio, that basically signals the end of that fiat currency. It's one of the signposts of the milestones that it held throughout history in all other fiat currencies. We're way above that now. We're way past that now. So yeah, I understand Powell has to say that. He doesn't want to panic the market and say, yeah, the fiat currency is eventually going to die because, he's a central banker. He's trying to manage that risk and those expectations because everybody hangs on every word he says. And so yeah, it doesn't surprise me that he's trying to make those comments that they're trying to manage it and they can manage it. But honestly, it's never happened in history that a central bank's ever been able to manage this type of situation with the money creation and the debt. And so I don't think he's going to be able to. It's just a matter of time before we have that eventual debt collapse and that currency collapse in the United States. It's just a matter of when. And I think you see people going into the precious metals for that very reason. Gold and silver are both rising because people are starting to see, they're reading the tea leaves and they're saying, okay, we need to do something. We need to go into these safe havens.
Now, for those viewers who are just joining right now, we're talking to Robert Kientz of GoldSilverPros.com. As we see today, the silver market popping above $28, $3 above where it was at the beginning of the May 1st silver squeeze. Now, Robert, one of our viewers is wanting to know about the gold silver ratio and where you think a fair gold silver ratio would be. We've seen really since March of 2020, the gold silver ratio just collapsing from about 125 to about 65 today. Your perspective on where a fair gold silver ratio would be?
So if we go back a couple of centuries of time, I would say it's about a 15-ish to 1 ratio, silver to gold. And however, in modern times, where I would say leading up to the last 20 or so years, it had expanded out to 30 to 1. But then when silver, meaning silver to gold, and then when silver got to be used more industrially, we went into the technology age and now into the space age. It's about 9 to 1 in terms of mined ounces. So that has changed over time. So if we just look at the mined ounces every year, it would be 9 to 1. Of course, the difference is silver's used industrially and put into landfills because very little minute amounts are used in millions and billions of applications, whereas most gold is above ground. So I don't know right now that there is necessarily a fair ratio if people flood to silver in terms of investment demand. I think from an industrial perspective, right now it's 9 to 1. The last 20 to 30 years, maybe it's 30 to 1. But all bets are off when people start going into silver. And I'm talking the big players, the pension funds, the hedge fund managers. When the world goes to silver and to gold as a true investment hedge, when you have problems with fiat currencies, I don't think there is any ratio. And the ratio could flip. I wrote for Seeking Alpha about 11 years ago that at some point silver could touch the price of gold. Now people would think I'm absolutely nuts. But when you look at above ground stocks of silver and the industrial and financial demand, I still stand by that. I think at some point you could have an equal price between silver and gold. Now that may be some time away, but it wouldn't surprise me if eventually that does happen.
And I guess, what is your perspective on that? Because that does seem like a pretty provocative statement, right? That we could see silver equal the price of gold. Really, we've never really seen that in history though, have we?
Well, I would say in certain societies, like in Egypt, you had more silver than gold. So back when you didn't have easy transportation, you have planes and trains, right? People used whatever metal they had as their money. So in Egypt, silver was worth more than gold, or used more than gold, essentially because it was easier to get. So, and sometimes in history, silver was equal to or used more as money than gold was. Just depended upon the situation. Now, if you look at what's happened with silver and gold, most gold ever mined is still in some sort of investable form or jewelry form above ground. There is some use in gold, particularly in electronics like motherboards and things like that, where gold is better than any other metal in minute amounts due to its malleability and its other properties. But silver is basically taken over for gold in industry. And so most of that silver ever mined has been used in minute amounts over billions of applications. So how are you going to get that silver back? You'd have to go scrap out of landfills and things like that. So silver is so tight in terms of overall availability and its importance to the technological society in which we live. There's extreme pressure on silver right now. And again, if we have a financial crisis, a true financial crisis, the next banking crisis, people who cannot afford $2,000, $2,500, $3,000 gold are going to go to silver. And that's going to spike the price of silver very, very high. I don't think silver will remain permanently above the price of gold, but I could see it touching on gold when we hit the next big financial crisis.
For those viewers just joining right now, we're with Robert Kientz of GoldSilverPros.com. We're watching silver pop above $28. We were talking at the beginning of this live stream how this is extremely bullish on really a technical level for silver, and that you could see silver pop above $30, 32, 33. Your perspective on really, is there much downside from here? Could we see a reversal from where we are right now?
I mean, it's always possible. Hey, when you have these big paper markets on COMEX and the London OTC, yeah, I mean, it's always possible. You just throw a bunch of paper on it. And if the traders want to go short pressure, they keep putting more short paper and the longs take it and accept that paper, then yeah, the price can come down. I mean, stranger things have happened, Elisha. We popped, when you had the May massacre in 2011, we saw silver fall from 50 to 34 in a matter of days. And that was all paper trading. You see it on the chart. It was not physical trading. It wasn't everybody going to the coin stores and selling all their silver and driving the price down. It was the paper markets. Yes, it can happen. But if you look logically at what's going on, the extreme shortages of the retail silver now starting to extend, by the way, to the London LBMA market. I want to repeat what happened, what the LBMA just admitted. They overstated their March inventories by 3,300 tons of silver. 3,300 tons. It's right there on their website. They admit to it. That's a lot of silver. And you see the premiums today rise on the bullion, the government minted coins and the regular generic coins. I mean, there's extreme shortages. I don't see in the short to medium term a lot of downside factor for silver. I just don't see it. There's such incredible pull on the physical inventories that's going to cause people to go long in the derivatives markets. Could it fall $1 here and there? Yes. But especially as it challenges 30, there are entities in the markets that don't want silver to go above 30, because when it goes above 30, it gets more expensive industrially. And if you're a Samsung or an Apple or you're China and you're trying to build a technological economy, you don't necessarily want higher than $30 silver. So there could be participants that go short it to keep it down so that they can get the physical stocks cheaper. But that's only going to last so long when the rest of the world is flocking to silver in physical demand. So I just don't see a lot of downside risk here. And going back to what you mentioned about the technicals are extremely bullish. You have two bull flag patterns followed by a head and shoulder pattern, followed by a breakout in the 50 and 200-day moving average. That sounds like to me that the derivatives market wants to go long silver overall.
No, in your perspective, when it comes to gold, as we see it approaching 1900 once again, where does gold stand technically?
So gold technically also has a really strong chart. It's a little bit different than silver because essentially it, I think it's going to pop slightly after silver, but I think silver's big move will come when gold has a big move. The thing that's happened with gold recently and just within the last few days is it's popped through its 200-day moving average. So gold is now eclipsed its 200-day moving average. It seems to have broken out of that cup and handle pattern. People who have followed me know that since 2011, there was a big dip in the gold price and then a run back up. I think we got up to almost 2070 last year. And then there was a handle pattern, which is a retracement. It's about usually anywhere from 10 to 20% retracement. That's a consolidation pattern over basically a 10-year time frame. And that's extremely bullish for gold. So from a technical perspective, I think we've broken out of that retracement in gold. I think it's now running long. I don't see anything really stopping it at the moment, especially with that inflation print. I mean, you have the inflation print, you have a lot of bond issuances under pressure, you have negative interest rates in the economy across the world. I don't see the reason why gold's going to fall back down. I think it's had its consolidation pattern. I think it's going to run. And it would not surprise me if we hit $2,000 gold again this year. Wouldn't surprise me if it would hit $2,100 gold again this year. And I think if we hit $2,100 gold, you're going to see silver pop above that $30, $32 range and stay there.
Now, in the silver market, you mentioned how there were shortages developing. Are we seeing the same thing for the gold market?
I don't know if there's shortages. Now, there is a lot of demand at its current price. So I would say the marginal demand of gold is stronger than the marginal supply, meaning for every new gold ounce produced. And that's what's increasing the price. And I think people see that. And I think that's being reflected in the derivatives markets. I also think the run up to June, Basel III, where gold has gotten a little bit of different treatment, where it's a more important part of the overall banking system. I think in the last 10 years, the central banks have been buying gold like mad. I think that trend's continuing. So there's a lot of pressure on the gold market in terms of demand. Now, there is a lot of above ground stock of gold. So, you could see more frequent retracements in gold than you would in silver, especially from industrial demand perspective. But again, the world is moving to a point at which we have flooded fiat currencies, debt, negative interest rates, inflation is starting to pop in the US. Those are all extremely, extremely, extremely bullish for gold. So I don't Could it retrace a little bit? Sure. But I think we're headed to 2200 this year for sure. And I think it's going to continue to run. There could be some corrections along the way, but I don't think we're going back to 1600, 1700 gold. I think that consolidation period is over.
All right. Well, Robert Kientz, it's been a pleasure having you on the show today. If people would like to hear more of these live streams, more of these interviews, they can go to libertyandfinance.com. In the upper left-hand corner, put their email and name, and you'll be notified of our newsletter and all the new interviews we're doing. And if people would like to find you, Robert, where can they go?
You simply go to goldsilverpros.com, find us on Twitter at goldsilver_pros, and on YouTube under GoldSilver Pros as well.
Fantastic. And if people would like to support this channel and acquire physical precious metals, simply email libertyandfinance@protonmail.com with your name and phone number. And once again, Robert, thank you so much for your time today, and God bless.
Happy to stop by. Thank you.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And a quick update before we get to today's video, because I recorded a short update about an hour ago, and the silver price has already spiked quite a bit higher than just when we recorded. So currently up 77 cents, right about noon Eastern time. And with that said, here's a quick update with some news about silver and what's going on with Kuya Silver. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a silvery Monday morning, because believe it or not, price of silver actually up 34 cents. Looks like some volatile trading since the open on Sunday, but hope everybody's week is off to a good start. And this is going to be a short video, but did want to check in with the great David Stein of Kuya Silver, because David, it looks like there's some guy who talks a lot about silver who has showed up at the Kuya Silver mine. The executives, they don't know what to do with him down there, but while silver is up 34 cents today, I hear you guys have some news out, and I appreciate you dropping by and giving us a quick update on what Kuya Silver has been up to.
Well, thanks, Chris. Yeah, look, we announced on Friday, a couple days ago, that we acquired this mine that is next to Bethania. And, it's actually a deal we've been working on behind the scenes for many, many, many months, and, just kind of keeping it quiet. So very, very excited that the deal's done. It's kind of a game changer for us. It gives us a lot of new land very close to the Bethania mine that we know is mineralized, right? There's a kilometer of a vein system, at least a kilometer of a vein system that's very similar to what we have at Bethania, that we can see on surface. We know that these, the former owners were going in and mining this at a small scale. So we know there's something good in there, or that's what we think. So, and then we took samples on surface, and we got some very, very exciting results there, which are in the press release. So all told, when we think about how, the Bethania property, obviously has very, very exciting potential at depth and along strike. But there's a limit to that, of course. And we've just sort of blown the door off our limits by acquiring another almost identical system, just a few kilometers away. So we're very, very excited. Had to sort of keep this quiet for a long time. We've been working on this, but now we're done. So we're very excited to get in there and start working.
Well, it does sound like good news, especially in the midst of a hyperinflation campaign with no signs of slowing down. David, real quick, on a deal like this, what is the downside? Because I know a lot of investors here, all right, well, a company is acquiring new mineral rights. That sounds great. What are the risks that they want to make sure that, unfortunately, I think we're in good hands, because I know the way that you do things, you mitigate those risks before you do the deal. But for people, so they can understand, could you touch on that for a second?
Yeah, it's a good question. I mean, the way, we did a lot of due diligence on this beforehand, of course, but in the way that we structured the deal, I mean, really the only downside is a very small amount of cash that we paid up front on the deal. And in fact, we actually arranged this deal, to basically pay it off over a few 18 months. So, I guess if so that actually spreads out the risk for us, for our shareholders. And so there's actually very almost, in effect, little or, zero risk right now in terms of doing this deal.
Well, it reminds me, it's like the opposite of the U.S. government throwing darts in the wind with their treasury budget. Although, David, one last question before we wrap up. Obviously, Peru, people wonder about jurisdictional risk. Here we have some moving pieces on the run, which is always exciting. Maybe I'll go to Peru headquarters after if you draw me away from your mind door here. But what's going on with the Peru politically, and what should folks know about that?
Well, there's an election going on, which happens every so many years in every democracy. And look, Peru's been a really fantastic place to be a mining company for many, many years, and it's got a huge mining industry, big companies, small companies there. It's really a backbone of their economy. One of the candidates is definitely sort of left leaning and talking stuff that obviously as a business person we don't like. However, I think there's been a I guess an overreaction to this, I would say, to sort of throw the baby out with the bathwater with respect to Peru. First of all, they elected a really business-friendly Congress back in April. And so, and that's something that I think a lot of people gloss over who just sort of see this guy, one of the candidates, he has been leading in the polls, but very slightly right now, and saying, okay, well, if this guy's getting elected, then Peru becomes, the next, socialist country. That's not going to happen at all. There's going to be, if this guy even does win, there's going to be huge opposition to any drastic changes from the Congress, from the, almost half the population that didn't vote for him. So look, the chances of Peru just sort of flipping into, overnight is very, very low. It's not zero, but it's very, very low. And so we're bullish to operate there and maybe even take advantage of this situation, like we've been able to do with doing this, this acquisition now, and maybe there will be more.
Yeah, and I find, at least in my experiences, I've been following mining. Yes, it can be a roadblock, but for someone who has the expertise or gravitas to negotiate these things and realize governments want money, it's a negotiation, and so fortunately, I feel comfortable, and I'll look forward to seeing how you handle that. But for folks who have questions and want to know more about what's going on, what the plan is, how you will address that, what's the best way for them to get more information?
Well, always the best place to start, Chris, is on our website, kientsilver.com. And from there, you can, access some of the information that we have to download, and you can also contact the company. We do online meetings with some of our investors and shareholders, and if on request, and you can also send email to us as well from there.
Yeah, and I like that you filter this out. You're required to be human, so you don't have to waste your time with investment bankers. Brilliantly done as always, sir. And folks, for anyone new to Kuya Silver, David has recorded a profile interview before where he walks through the company, gives some more information, and that is coming your way now.
Hey everybody, this is Robert Kientz of GoldSilverPros.com. I have a very special first-time guest on the program, Glenn Jessam, who's the president and CEO of Silver Tiger. How are you doing today, Glenn?
Very, very well. How are you, Robert?
I'm doing very well. So excited to have you on the program because you're mining what we love for our subscribers, silver and gold, and in a district that we want to be in. And I want to get to your project here in a moment, but I wanted to set up the conversation by talking about the overall environment for the metals. We've had a lot of stuff happen last year. Of course, we had the shutdowns. We had some supply squeeze coming from the mines. Now they're recovered, reporting record profits in a lot of cases. I think the environment's very positive for the miners, but I wanted to get your take on the challenges we've been through the last year and where you see this market going for the rest of 2021.
Look, I first want to step up. Let's go to 40,000 feet.
Okay.
You're never going to hit the silver market right on. And a good friend of mine, Brad Langell, told me, we've been partners for 25 years. He said, Glenn, how do we never miss a good silver market? We never leave it. We've been mining silver for 25 years in Mexico. There's ups and there's downs. They come and they go, but we just continue to do what we always do. Only mine silver and only in Mexico. That being said, we've seen a lot of ups and downs. We built 3 large mines in our history, Robert, in Mexico, big ones. We sold 2 more to majors. We've got, our group has Gold in the hunt right now, and Silver Tiger. But one thing and we talk about a lot now is we have never been more excited about silver. Look at it. The world is changing. Everybody wants their battery cars. They want solar power. They want their 5G. Silver's an inframetal. Forget precious and industrial. That's the backbone of that product of all of those technologies I just talked about. It's always about supply and demand. We are very excited. There are not many true silver mines in the world. You know that, and I think your readers do also. We think we're on to the next one here with Silver Tiger.
Yeah, I'm really interested in silver. It's with the silver squeeze movement that started to occur in January, February. We've seen such incredible interest in the silver space from the retail investor. Of course, Wall Street Silver has gone from 0 to 70,000 subscribers. We're a partner with them. We do a lot of collaborative work together, and we get a lot of interest in silver as an investment metal, which I think, to me, is really the story. If you talk to David Morgan, he's been saying for years, we've had him on the program, you know, where silver price is going to go higher is that incremental demand from investors. And I think we're at that stage where we're seeing it. We see the high premiums in the retail, and we're starting to see reports of higher premiums in the 1,000-ounce bar. So it's starting to hit the bigger. So what's your view on silver going forward? Do you think we're going to continue to have this retail investment demand, or you think the story is going to be industrial driven, like you mentioned, with the need in industry?
Look, it's all of it. You can't just say it's not one. But you know, we've watched the ups and downs. As I said, 25 years we've been mining silver in Mexico, and what we see now is all of it coming together. It's always precious, it's always industrial, but now, and I really hadn't thought about it. Thank you for making me think more about that. We see the inframetal demand, all the technologies I talked about. I'm not going to repeat it. They need silver. At some point, they need to get that product if they want to have all of those technological advances, which we will have. It's going to happen. But yeah, the retail, you know what? I love to watch some of what happened with Reddit, because this got to be a little bit of an old man's game. And I'm telling you that, you know, and a lot of those old gold and silver bugs, you know, they're retired or they're moving on. So to see actually the young generation coming in and realizing this is something I can trade. I can trade metal. I can trade junior stocks. I can trade producer stocks. And that's exciting. So whatever you're doing to make that happen is only going to be good, not only for us, but for them, because we see the brightest future, pardon the pun, for silver we've seen in our entire careers. We think this will be the best run of all.
Yeah, we do. We predicted that both gold and silver's runs are coming up. In fact, when we talked to Go Gold, one of the subjects of our conversation was the next super cycle, the gold and silver super cycle. I think we're setting up for those super cycles for all the reasons that we've chatted about. And one of the ways in which to play silver, if right now you're frustrated getting high premiums on retail and you want to get in silver space, is to go to silver miners. Of course, you get the leverage with the miner that you don't get with the metal, but you also get the risk. So you want to pick a good project in a good jurisdiction with good management. So if you'd like to talk a little bit about Silver Tiger and what you guys offer the market, and let's get into, you know, the value that you bring your investors.
You know, Robert, I think just so everybody knows, it's important to understand 2 things. The team, track record in the jurisdiction, and the project. So I think maybe if it's okay, I'd like just to share maybe my Verify presentation, walk everybody through a couple of slides just to orient them where we are. So let's see if I can make this, you know, an old dinosaur like me, if I can make this technology work, Robert. But I've done this before, and we'll see what happens here. And then we'll keep on going. All right, here we go. You know, the slide I want to go to first, and I want to talk about, look, you're readers or those who watch this may or may not invest in Silver Tiger, but I invest in silver stocks all the time. And I have a rule. My first question to whoever is trying to sell me their junior mining stock in silver is, okay, how long has your team been in that jurisdiction? That's a very important question, Robert. If they say, well, this is our first gambit, a little red flag goes up. We've been in Mexico 25 years, 3 large mines, 2 mortar majors, and we've built 2 very, very successful companies now that we've talked about. The next thing I say is, how many mines have you built in that jurisdiction? Look, everybody starts somewhere. We started with none 25, 26 years ago, built 3. That's not easy to do. No. And everything we do in this jurisdiction, we can only control one thing, our boardroom and what we can do. We can build a mine. We can deliver ounces and the economic reports, 43-101 PEA pre-fees. We've done a lot of that in the last 5 or 6 years in Mexico. We'll talk about that. You have to be able to do that because those are the things that drive value. And we can, because of our track record, we've never had a project that hasn't been successful, that hasn't either we've built the mine or we've sold it to someone who has. That's a great track record of 25 years. We think what you're looking at here, Silver Tiger, which is in Sonora, a great mining state, will be the same thing. Look, you know, we've had a great, we just got going on this thing in 2000, really fall of 2020. Since then, I've done 2 bought deal financings with investment banks. The first one was 11 million at 30 cents. Before we spent that money, we were offered another 23 million at 60. I told everybody when I took the money at 30 in September of 2020 that I would take no more money until I doubled their value. We did that. We raised it at 60 cents, Super Bowl weekend. Very, very good institutions we had in there, all institutional investors. That whole 23, with the majority was taken by Franklin Templeton, Gold Fund, SAM, Merck. Those are the best institutions for precious metals in the world. And you know, that's when you say, how do you create value with a junior? We're up from 10 cents in the last year to trading strong at over 70 now, with incredible liquidity every day. You can see what we trade. Probably the best in the business for juniors in Mexico, for sure. On average, I think we've traded over 200 million shares in the last 6 or 7 months. And that's only on the basis of delivering results with the drill bit and moving the project forward. Let's talk about what we have. I think your people have to see this beautiful package. Bought a public company in 2017 at the bottom of the market for $11 million called El Tigre Silver, delisted that company, and vended this asset into Silver Tiger. It's 30,000 hectares. It's 25 kilometers. The Sierra Madre runs right through it. But make no mistake, Robert, what we are in Mexico, an all new discovery in Mexico. Your viewers should know that. We're garbage men. There's no new discovery. All the new mines are found under the head frames of old Spanish and or American mines. You'll love this, especially your American viewers. This was an old mine, 1908 to 1930, where I just put that blue line. 100 million silver equivalent ounces came out of that American mine at an average grade of over 2 kilograms per ton silver. That made it one of the hottest, if not the hottest spots we'd ever looked at in our 25 years in Mexico. We had to have it because the old timers usually only scratch the surface. And boy, were we right when we got this thing. We locked it down. Everything we need there, from power to roads to water to all of the things are very accessible. We drive right to the mountain. We have own all of that 30,000 hectares. We have agreements with all the ranchers to exploit it. I actually, someone, if they'd been paying attention earlier, within the last year or more, I bought the middle 6,200 hectares of surface rights. I paid $1.1 million for that. Most people who knew our track record would have said they've made the decision this will be an economic deposit that we will build or someone else will. And they'd be very correct in guessing that. The last thing I loved about the project when we acquired it was the simple fact that the royalty was still intact. Many of these things we look at in Mexico are ruined. There's 7, 8, 10, 12% royalty given away. This one is absolutely clean, and we'll exploit that royalty as we go forward. I do want your viewers to understand in Sonora the power. And I'm going to spin this map. I think it's very important that they understand what a new discovery of silver, because there's not that many in the world, can lead to in Mexico. If you look here, we're spinning, you see some of the biggest mines. We're surrounded by them within 10, 20, 40, 50 kilometers. We're looking south now. And really what I want you to look at here is that Sierra Madre heads off south for 1,000 kilometers. We're covered by all the analysts, Robert. And I think that's another thing that people should look at. When you got a young junior that's covered by Sprott, Echelon, Stifel GMP, all of them, Bank of Montreal, we were invited this year, smallest company there, I'm guessing, to the big February show they have every year. They put out a research notes on us. That is very important. That separates you, because now the banks are having their independent geologists tell you and allow you to have that information of what they think. Consensus pricing next 6 months from all those analysts go to $1.30 for us. We're trading at about 70 cents right now. I can send you some of that. If you ever want to share any of that with any of your viewers, let me know, because as you know, the institutions keep that for the institutions tight. But what they're all calling us, and started calling us in September, was Cheese Pop, Silvercrest. We thought that was a little early, since we were just getting drilling in September of 2020, really getting after it. But make no mistake, that was the same thing as us. Why all these American mines closed? That's 95 kilometers from us in Sonora. That was $3.5 million market cap in 2017. Today it's $1.7 billion with $250 million in the bank. They're building their mine on the basis of delivering 100 million silver equivalent ounces in a 43-101 with feasibility at an average grade of about 700 grams.
Yeah, and I wanted to, if you don't mind me interjecting here.
Yes, please.
2018, I went down to Las Chispas and toured that.
Oh, very good.
With Chris and team, and I will attest, I started writing about it on Seeking Alpha in 2018 when it wasn't getting a lot of coverage, and I wrote an article and said Silvercrest is the real deal, because you could see, especially in that Babicanora vein, where they found the resource there,
100%.
and I knew that it was going to blow up. I just had a feeling. And we had geologists down there, metallurgists from a lot of the buy-side analyst teams, and they were very positive about it. So that's why I love this district. I've been to this district. I've looked at other mines, great mines coming out of there. Silvercrest is a huge story. And this is if you're investing in Mexico and you're investing in silver, this is a great place to be.
Absolutely. And that's why I'm referring to, look, Eric Fear is a peer of ours and us of his. He's been in Mexico the same amount of time as our team. We know him well. An incredible job he's done there. But, you know, and Eric wouldn't mind me saying this, like I said, and very respectfully, we're garbage men. He is the same here. This was a big Swiss mine at the same vintage as the Tiger, a smaller mine, a much smaller land package, about 3,000 hectares, I think. But he just drilled off what the old timers left him, and what a success. Robert, you have to understand, people go, why were these here? It's too good to be true. But why they're here was real simple. Everything, all those foreign-owned mines in Mexico in 1930 closed, and they sat there. Eric set Cheese Paw and ours at the Tiger for 80 or 90 years. Silver in the Great Depression went from $1.33 to 10 cents, and everybody went home. And we're so lucky to have been able to buy this district by acquiring the public company. Like Eric took that SpinCo out after he sold his Santa Elena to First Majestic in 16. So look, those are the similarities. The only difference is, we're just a couple of years behind Eric. We're just getting going, but so far so good. A couple $100 million market cap, 25 million bucks in the bank, and we're getting after it. And I'll show you what we're getting after right now. Is it okay, Robert? I don't want to spend too much time on the slides, but I really want to show, I think we should see the underground model of the old mine so they understand what we're after.
Yeah, absolutely.
And I want to show them the plan map and sort of the results we've had. That there's a reason we're $200 million market cap from 20 in 7 or 8 months. It's not promotion, it's drill bit delivery, and just like Silvercrest did. So let's go look at, I think this is my favorite slide of all the slides on the in this deck. When we got there first in 17 and got this under our control, bottom of the market was tough, but we reached about $20 million, Robert, on track record, because no one was really following silver back then, and we put it all on the ground, and then we went after information. There's the old Tiger mine, 1908 to 1930. 100 million silver equivalent ounces. The old timers, the Americans, went down underground after over 2 kilos. You can see what they did. They chased that clavos. They stopped at 450 meters. They went home. 2 other veins they mined there, which were very important. I'm going to go plan view on this so you can see it, were the ones we're really nailing now. And you'll see the black is what they took out of it. It almost disappears. They went after a 0.5 meter of that super high grade stuff. And you can see that's what they took out. On the Tiger vein, very important, because we're going to talk about this in a minute, they went to 450 meters. They went home. On the sites Kelly, they went for kilometers, super high grade. When they went home there, they were only at 150 meters. On the western vein, the Stewie, they only drifted for 300 to 150 meters. This is the one we're going to have. This is where we've been killing it here in the drill bit in the last 2 or 3 months. That vein never touched, continues for 1.5 kilometers and continues for 2.5 kilometers to the north. So you saw what at Cheese Paw, the vein you talked about, delivered. Boy, did they ever leave us a lot there. And all around the mine. Two things that make us a little different that you need to understand. We're seeing much wider zones around those veins at depth, 10, 20, 30 meters of some 600, 700, 800 grams, plus a super high grade center, multi-kilo. But what we knew, and a little different from Cheese Paw, is there's an open pit around all of these at surface. When we first got there, we'll just show you what we did. We banged about 12,000 meters in this thing. That's the old mine, and we wanted to test a theory. We bought 10,000 meters from that public company I bought. We drilled 12. What you're looking at there is a 1 million ounce 43-101 resource, almost a gram from surface. Around the Tiger vein, gone. We wanted to test all these veins going north and south. You'll see it in a minute. Okay, basically are in that formation from surface. All the drilling in the top 100 meters. So the difference in mining that you're going to see here when we do this, that's the top 100 meters, about 600,000 ounces of that 43-101 resource is about 2 grams. Only gold disseminates outside the silver veins. I'll show you a cross section because we're going to do classic Mexican mining. We're going to take the pit out first, and then you're going to go for up 800-900 meters and chase those veins to great depth like the old timers did. You can see in the mine. Enough about that. Let's go look at what we're focused on right now, the next 5 minutes or so, if that's okay, Robert. And then we'll come back and have a general conversation. I think your folks have to understand really what we've got here. This is what we're going to spend the next 5 or 10 minutes on. That's the brownfields, that middle 5 kilometers. But I want you to understand what we bought and keep that in your viewer's mind's eye. And I'm going to show you the total land package. Before I do that, to orient you, the black is the only place the old timers mined in that 450 meters. I showed you the model. You're looking plan view. There's the Tiger they went to 450 on. There's the sites they went to 150, and they only drifted on the Sui about 350 meters along strike to 150. Nothing else was touched. All of this to the north we're going to talk about, same veins. Same veins going north in the same structure. Never touched. We're drilling incredible stuff up there. But I want to show you how we're just scratching the surface because I'm going to show you quickly our land package that I bought when I bought the public company. That is 35 kilometers, 30,000 hectares. We have been across the middle now. Let me just go full screen on this. I think it'll be easier. We've been across the full 25 kilometers in the center. I'm going to put in perspective the only place we've done our work so far. Look, there's the old mine. There's the 2 or 3 kilometers north we've drilled. That's the only drill bits that have ever gone through this project. The old timers didn't drill. They just followed your countertop to 500 meters, the quartz vein. We've gone 12 meters to the south, all the same structure, 3 large mines here. We've been in all of them, full of gold and silver. Never had a drill bit. 10 kilometers north, all of these little mines, Polares, we've been in it on our package. Big mine, high grade gold and silver. Never had a drill bit. When we got on the other side of the upper volcanics, we had a theory that this beautiful yellow rock, that's the layer that does that gold dissemination, might come out on the other side. It did. The vein sets repeated itself. We've named it Santa Maria, kilometers long. We added 6,000 hectares. That's a district. My technical team tells me that I'll be dead and they'll still be drilling off ounces at the Tiger. And that's what these big systems are when you find a district. Pinos Altos, Aro Campo, they're all the same. Tayatito. We really think that's what we're on to. And we can say that because we've been there for 25 years building mines. That's not promotional. Let's go back and end this with sort of what we delivered and what we're seeing ahead of us as far as, the next step. How do I get this from what I told everybody, this 30 to 60 to raise that 25 million from institutions, and now how do I get it to $1.20? I think we're going to have enough here with the 25 million we got in the bank to spend right here in these 5 kilometers to do that. That's the goal. We got on the mountain and we put 3 drill rigs on it last fall. September, October, November, we phased them in. What we hunt in Mexico, so you understand, are clavos. There was the first one, the old mine. It's an ore chute. Goes to great depth. That's what the old timers chased to 450. We saw the next one up here evolving because all those same veins had come together, geometry more than geology, and we drilled our first holes up here. I'm going to show you some of those results first quickly. Near end of November to December, we discovered the Benjamin vein, about 800 meters of strike length. I'll show you some of those drill holes, incredible, the first 3 or 4 holes in it. And then a hole we drilled end of December, which we've now followed up on that vein the old timers barely mined for a kilometer of step out, but about 10 holes, everyone nailed it in the last 2 months. And that's what's getting everybody so excited now about this. So let's go look at, and I think the way to do that is cross sections. Remember, Robert, this is 2 kilometers north of where all the mining stopped. None of this ever touched. We walk on it, it's all at surface. And remember this too. See all the yellow rock? That's that El Tigre structure. Wherever those veins pass through that's that great plumbing at surface to the 100 meters, where outside these veins, you get that gram and a half gold dissemination. We're seeing that consistently across the project. First here results, then this, and then the game changer hole we drilled here. Look, this was boring exploration all fall. All the drilling in the top 100 meters. This is not complicated. This is Mexico geology. We went up here and we said, let's delineate the pit and test the high-grade veins that up here have never been mined. It's real simple. All the drilling. First hole we put in it was 1 meter 10 kilos, 7.3 of real silver. We figured we were on the right track. Here's a representative hole, 30 meters from surface. We walk on all the mineralization. The veins we walk on, they all daylight. And here you start to see exactly what we hoped. In that hole, 30 meters from surface, we get almost 1 meter of 3.7 kilos silver, 26 grams per ton, 26 meters of 2 grams per ton gold, gold disseminating outside. Real simple exploration. You can go look at those results all in the top 100 meters. Drill off the pit first. It's really simple. Step out 25 meters and do it again. Remember the old timers, and then it just tightens up. Then you go underground for upwards of 800-900 meters. That's just what all our mines have been really in Mexico. And if you look at Pinos, they're all the same. So that's really what we were doing here. Let's go back to the map. I show you the next result. Very important. There we've got about 1 kilometer of that in front of us. We'll just keep stepping out. Beautiful stuff. 3 holes in the Benjamin vein. New discovery, press release 1st of February. Let's show you what we started drilling here. Wait till you see the wide zones we start to get into. These are the first deep holes ever drilled under the mine, around or under this. Now, this is about 1.5 kilometers north of the mine. No one ever been mined here. What happened here is that tiger, that first 150 meters where the gold disseminates out, it's not here. It's eroded away. So we got down in this flat formation. Results were, first hole through it was 3 meters, 1.3 kilos, 75 meters from surface. We step out again. Look at the width of the zones around it. I mean, everybody's saying, we know we've got tens of kilometers of 1 meter of 1, 2, 3, 4, 5 kilos. But look at this width, 8 meters of 407, 75 from surface, 12 meters of 266. And look at the heart of it, just super high grade, 2 meters at 1.4. Step out another 25. These are the only 3 holes. You'll see more results coming as we continue to drill here. Look at this, 14 meters of half kilo. That's valuable ore, Robert. And 5.6 meters of a kilo. The separator from us, and you understand cheese paw, and that's wonderful. We've got lots that narrow vein. What's amazing us is the wide zones of open pit from surface now. And as we get a little deeper, we're seeing not just the quartz vein, which the old timers, that's all they went after. They didn't drill any of this. They left everything else. Incredible. Now, last thing I'll show you, and then I'm going to be quiet, and we're going to talk about this a little bit. But you have to, this is something that your viewers have to understand, because this really shocked even the team on the mountain. Been doing this for 25 years. Last hole of the December program was hole 202. The guys said, look, we're killing it up here. New discovery here. They knew they had it, even though in the results they could see the chalcopyrite, sphalerite, the black sulfides in the ore. Let's go up over the old mine. Remember, we got all the mining records. I don't think I told you that. We went to the University of Wyoming, 2017. Every record for that old mine, every stope record, Anaconda collection there. Every 5 feet, we had the mine record of what they mined. In the bottom level of the Tiger at 450, The bottom level of the Sui we're talking about now at 150, and the sites, Kelly, this one here at 150. Everything they stopped mining, it was 2 kilos. They went home, 1930. Incredible. So the guy said, look, this was the hottest spot we ever saw. Let's go get a drill down dip underneath where the mining stopped and see, we expect 1 meter, 2 meters of a couple of kilos. We missed, but boy, did we ever get our eyes opened. And we knew we would when we drilled around this hot spot. But let me show you that result, which is, to put it in perspective now so people can start adding up what we're seeing in this one vein. The Sui vein, the Benjamin is just the northern extension of the Sui. That Sui vein runs for 3 kilometers strike there. We just showed you the new discovery here. We stepped out 1.25 kilometers, none of it ever touched. And we drilled hole 202, and now we're a kilometer south. I'm going to show you those drill results after the first one, the next 8 or 9 holes in sequence, and what we hit. It was incredible. Here's the first one. We missed. We didn't get quite deep enough. There were actually, when we went back and looked, there were 7 levels. And to put in perspective, so we're down at the old mine now. Remember, the old timers never wanted the open pit. That's what we take in the Tiger. They took the vein right down 1/2 meter. That's all they took. They chased that countertop, quartz vein, to about 140, 150 here. We missed. We went through the mine workings. We were 1 level too high. We went back to University of Wyoming, found out there were 8 levels, not 7 in the old mine. But boy, did we ever get a surprise when this ended up in the core box, and we saw that 1st of February. The whole team were on the mountain, the technical team, the next day. That's extremely valuable ore. 125 or 50 meters from surface, 12 meters of 700 grams, 22 meters. What we really knew was immediately said, wow, there's a parallel vein. Now, is it going to follow this thing? Well, did it ever? I'm going to show you in sequence 25 meter step outs, then at 150, then at 250, all in sequence, then 1.25 kilometers going south following the Sui vein. That's what's driving the real excitement now. There's 25 meters south. You can see we nail it again. You can go and verify on our website any of your guests and just get a deep dive. All these slides are on there in the slide presentation. But look at that, 9 meters of 700, 2.9 of a kilo. That's 25 meters. There's 50 meters south. Now we went down dip enough. We finally hit what we were looking for before. The Sui vein, 1.3, because it's not mined. You're just down dip underneath the mining of 1.3 kilos. Look at this width starting around those veins. That's incredible stuff. That makes the mining of this so much easier. And we went out and we nailed a little bit in the Sui, in that new structure. And you can see we've got it on the map here. There's 75 meters. We're in that parallel structure again. We're just following it south. There's 100 meters. We're down below the mine workings. So we get 2. We get the Sui intact. The old timers went after the 450 in the old mine. This goes for a kilometer, we think. Beautiful, beautiful. Look at this wide zone in that. And we got that parallel structure. This one is 150 meters south of that discovery hole. We lost the hole here, so we didn't actually pick up the next structure, but we got the Sui vein. This next hole was incredible, 250 meters, and we picked up a parallel structure in the hanging wall, Robert. Look at those 2 holes. I mean, the first one, 11 meters of 325, 469. Look at the guts of it. 1/2 meter of 5 kilos. So now what we're chasing and what we're seeing is we're seeing parallel vein systems on each side of the main veins as we drill deeper. We then went one more. We said, let's go another 775 meter step out with the next hole. No mining down here. Same structure, same layer cake. That's the whole 10, 12 kilometers is like this. And we picked up the Sui again and a great result. So to go back to the map and what we see now, remember, no drilling here when the old timers mined it. They just chased the quartz vein. Anything on either side. Their cutoff for the mine was 1.2 kilos, Robert. Can you imagine? That was the cutoff. So anything 600, 700 grams, they wouldn't even care about it. So what we're starting to see here form, put it on perspective, on this is just the Sui, and that's what we're really after right now, that 3 kilometers. We got the first holes in the Benjamin, more to come. We're following that south. We took the drill about here. We're out about 1.25 kilometers in it. You saw those results. We're seeing a parallel vein in the hanging wall and footwall following it. We saw the same thing, only in the top 100 meters around the Tiger vein. None of this ever been touched. So these are all new veins in time. We're calling them footwall hanging wall. They'll get names. We'll put that on it. So we're just going to keep going south here. We've got drill holes, and we're going to put about 50 meter spaces right to the end of the 3 kilometers. This is an interesting hole. when the boys, and you can see, this is so easy to see, you can see what we did back here in 17, 18 after we got, that's all our drill holes you see here. That's where we drilled off that 1,000,000 ounces in the top 100 meters around that Tiger vein that had been mined out to test the open pit theory. But at the end of it, the boys went out because none of the Tiger was mined for the next 500 meters. This just keeps going. We just have this on the map. They stepped out 500 meters, which is another 1.5 kilometers from our last step hole I showed you. And just one hole, it was one of these. They nailed 1.5 meters at 7:15. So we're going to go after this hard. This will, and we'll talk about what the plan is on a resource estimate when I stop here. But this is very interesting. You're going to start to see the first holes coming out of here very soon. We went down dip here and you saw what we hit. This was probably the richest vein they mined for a kilometer on the east side of the mine. This keeps going under the upper volcanics. We're going to go down dip at about 150 meters the same way. Pretty excited there. We expect, well, we're going to hit the vein. It was when they stopped at 150, it was all 2 kilos. We have the records, but we're hoping and don't see why we're not going to start to see these other parallel structures that nobody ever touched. So that's the story right now. 3 drill rigs, going to 4 on the way and a 5th. And you're really going to see us, we want the plan, we're going to attack this thing. And my goal would be, can't guarantee it, get this thing 50 meters spaced here, 25 million bucks in the bank. We win one way in Mexico, Robert. You don't follow drill holes, you drill off ounces, and you move it to economics. I think our group in the last 5 or 6 years has delivered 7 43-101s with PEAs, pre-feasibilities, and feasibility studies. That's how you go forward. Because everything we're doing here is we're going to build a mine. And that's ounces, economics. So hopefully this would be my goal. And I'm not, I got to be careful what I say here, but we'll be back to BMO. That's kind of a big show for this industry in February next year. I'd love to go back there with the updated 43-101 to add to the 1,000,000 ounces I already have in the books in that open pit around the Tiger vein. It'll be high-grade silver ounces. And I want to have the first economic report, the PEA, to go with it. So that's the plan. It's head down now and drill. And you're going to see, the first holes under the sites will be part of that. And when we get that next drill, that 4th and 5th, back to tending to our knitting here, that new clavos that's evolved. We've got a kilometer ahead of us here from surface to delineate that pit. So a lot to do. Luckily, we've got a lot of money in the bank. The last thing I want to say to your shareholders, and you know what? We don't have to say it here. I'm just going to get out of this so I can get back on the screen. Last thing I'm going to say is, we're with our shareholders. That's how we do it. My management team owns 16.1% of the company. I own probably 13 million shares with a few stock options and warrants. But guess what? We bought them all. I've got 2.1 million of my own dollars in here. I get out 1 of 2 ways, and it's the same path. You drill off ounces and you deliver economic reports and we build a mine, or like when we sold Santa Gratuitous to an Eco Eagle a couple of years ago, somebody just has to have it, but they want the same thing. They want drilled off ounces and de-risk feasibility and pre-feasibility results. They don't buy drill holes. And we've been doing this for a long time. We understand what the big companies want. So that's the story. Very excited. I know you'll have some questions, but I just wanted to present it. The first time I think everybody has to understand really, we think we bought the next big district, silver district in Mexico. That's where I think we're taking this.
Yeah, and we can tell from your map, there's a lot you have yet to drill off, and there's also a lot you have left to explore. So this could have a fairly long mine life. I don't think even what you've defined right now is even close to what you're going to have at the end of the day.
Well, when you think about that middle 5 kilometers, and then you think about like we're just getting going on that. We got enough work to do there for the next 5 years. But when you look at that 25 kilometers and really appreciate, look at this. That's the old mine. That's all the work. Like honestly, I know people think I'm joking. My technical team have told me that. They go, no, and the Mexican technical team, no, we're not kidding, Glenn. It wasn't a joke when we told you, they'll be drilling and announcing you'll be dead, and they meant it. That's the lifestyle. Like what's Pinos Altos, 40, 50 years. Our Ocampo from the group, that's 30 years now and still going strong. So 10 million ounces behind it. So that's what these are. When you find one, they're big.
Yeah. So wrapping this up, I think we're in the silver super cycle. The Silver Institute came out in November of last year and said they expected us to have demand for over 1 billion ounces of silver for the first time. A lot of that's industrial demand. That was before silver squeeze and the investment demand movement that we've seen in 2021. So I'm expecting the number for the next few years in silver demand to be quite robust.
Oh, yeah.
So not only is it the project economics that you guys have in the district, the experienced team that's doing it, underlying all of that is we're in a rising environment for silver for both industrial and investment demand. And I see that as going several years. So as you guys, it's like perfect timing. As you guys are delineating your resource, that resource value goes up, and that just adds additional value to your project economics at the same time.
100%. Can I ask you, Robert, what you see? I'm not a guy who guesses at the price, because you know what? At $27 silver today, that's fantastic price for miners. For me, we're like, wow, that's great. To $1,800, $2,000 gold, that's fantastic. We mine gold. I think the first mine that the group built, I think it was $250. Imagine. I mean, it wasn't that long ago that we were producing silver and making money at $12. So 27 is great. But where do you think, and you do this, I never guess, where do you think silver could go? Where do you think gold could go?
Oh, I think
we're not holding you to it. You're much more knowledgeable about this than even me.
Yeah, I do a lot of fundamental and technical analysis, and I think silver's next stop is 30, and then once it goes through 30, from a technical analysis, there's no stopping till you get closer to the high 30s. But a lot of it, like I'll take a page from David Morgan, who's the silver guru. It's that incremental investment demand that drives silver, typically in an era in which we also need it industrially. So I think the demand profile is so strong for silver the next 5 to 10 years, and we're already at the silver cliff. For silver, we already don't have enough ounces to meet future demand. For gold, if you look at Crescat Capital, they did a chart, which we just had on the program the other day, where there's a gold cliff starting in 2028 of proven and probable ounces, and then it literally falls off that cliff in 2030. And so gold, silver's already at that cliff where we need silver right now. Gold's going to be there in a few years. So from the supply and demand factors, just the fundamentals, I see much higher prices for both gold and silver. And there are regulatory reasons why gold's going to go up with Basel III and these central banks recapitalizing the banking structure with gold in that regulation scheme that starts in earnest in June of this year, June 28th. So I think the fundamentals for gold in the central banking system are much stronger. So for all of these reasons, I think gold and silver fundamentals are stronger. And from a technical perspective, they look like they're both about to break out. In fact, gold and silver have already broken out, but I think that they have a long way to go in that next leg.
Wonderful.
And so to me, getting into gold and silver space is great for investors right now. Not a lot of people in the US do it. There's a lot of room for people to get involved here. And I think with the miners, you get that leverage to the price, which could, the returns on this could be amazing when you pick the right companies.
Absolutely. And, I recognize, like, we're in Canada, we've a small little city on the East Coast, amazing. We've been mining in Mexico out of this city of 250,000 for 25 years and building some big mines. But, I appreciate the size of your market, and really am trying to get some exposure for the tiger there. The securities lawyer in me really want to make it as easy as possible. So, I've upgraded our listing to an OTC QB listing, which makes it, for where we are in our development, as easy as we can for our American friends to trade the stock and call their broker and get involved. And so I know I just want to point that out, that we do trade down there also.
Yeah, and for our listeners, we do have a relationship with the OTC. I'm actually going to be interviewing Chris King here on the channel next week. So we have strong relationship with OTC. OTC is a good way to get, for U.S. investors, like you said, into a lot of the Canadian junior miners. Another route that people can go, if you get a Schwab account, Charles Schwab, they allow investment to the Canadian exchanges at no additional cost. So if you want to get into those tickers, you can do it through some American brokers. You have to look around. So they're easy paths to get there. Last question I'm going to ask you, and I have to bolt here in a minute for a plane flight.
Absolutely. Yes, Robert. You're traveling.
So last question, I'm going to let you write your own headline. What do you think is the outlook for gold and silver over the next year, and how do you think that's going to impact your company? And what do you want to leave the viewers with as the last thought there?
Look, we've been doing this for 25 years, ups and downs. We never stop being silver miners in Mexico. We build mines. The next 5 or 10 years, we're absolutely giddy because the world has changed. Precious, industrial, I keep saying it. It's an infra metal. It's 5G, it's batteries in cars, it's solar, and that's where the world's going. We're not going to stop that. I am shocked at how fast that's happening. And at some point, they've all got to come and they've all got to get their silver. And there's not much silver. There's not enough. And there's not enough true silver mines. There's byproduct from copper. We're a true silver mine. And oh boy, here's two things I'll say. It's a good time to own a silver mine. And the ones that will really, really be valuable are the ones that could put the next 100 million silver equivalent ounces on the books in a 43-101 with economics at good grade. I think that's where we're heading. And if it is, we will have exponential growth and value creation in our company, Silver Tiger, through this asset.
Yeah, we're going to be watching. We're stay tuned to that. I know you got a lot of news coming up with your drill results, and you're going to update your feasibility studies as you get that built out. So we look forward to that. Thank you so much, Glenn, for dropping by the program. We appreciate you.
I just am very pleased to be invited, and thank you very much, Robert, and to your viewers for taking the time to watch this.
Absolutely. Like I said, we'll follow you. We'll stop back by, have you on the program again, and get an update when the time's right.
Great. Thank you.
Thank you, Glenn.
Thanks, Robert.
Here we go. We are live with Cowboy Metals here on Gold Silver Pros YouTube. Welcome everybody to the show. I'm going to wait for YouTube to give notifications and let everybody know we're in, and we will get started shortly. We are live here. Thank you everybody for joining. I see quite a few people in the chat. Michael Sayre is here. The Cool Breeze, Hayden Martin, Jim Vestergaard, Jeff Keller, Silverback Cave. Everybody welcome in. We're going to talk today about the BIS versus the LBMA on gold and who's going to win. We'll get to that here in just a moment. I want to give it another couple minutes for people to get loaded in. We've got your update on the NSFR and Basel III. Once again, welcome into Tobacco Stacker. Peter Langvin is here. Hayden Martin, Jim Vestergaard, Prepper Days is in. Once in Exile, Philip Smith, everybody, welcome. We'll get started here in just a moment with the content as everybody gets into the chat and we get everybody loaded up. Welcome Adam Kozowski, Tim Champagne, Gary Porter, Mutant Ryef, Mari Sharon, hopefully I'm saying your name correctly. Hello back to you, Squirt9, from the great state of Texas. This is Cowboy Metals Live. We broadcast from the great state of Texas. And we love Texas, and on our live streams, we don't like to take a lot of BS. So this is a no BS live stream, and we're going to be bringing you some information on what's going on with the London OTC market and gold, the LBMA. But first, I actually wanted to start with something else. We're going to lead off with something from Wall Street Silver. I'll go ahead and share screen. And there was an interesting article that came out about Venezuela. So we'll get started here. Venezuela apparently wants its gold back now, as it's being reported on Wall Street Silver. And Venezuela is needing that gold because oil revenues are down. They need the gold to sell to get things that they need for their country, because they import a lot of their stuff other than the oil and gas. They import most items in their country. So they need food, they need medicines and such. And so they're trying to get their gold back. A nice little article here on Wall Street Silver talking about that. There's even a video posted here if you want to go look at it. It's called Venezuela Wants Its Gold Back Now. And I'm going to show you from the BBC News what's going on with Venezuela. They have filed a claim with the Bank of England over getting their gold. The gold is being retained following British and US sanctions on Venezuela. Venezuela says it wants the Bank of England to sell part of the Venezuelan gold reserves and use the fund to fight the spread of coronavirus. And it says it's agreed for the money to be sent directly to the UN to ensure it's not used for other purposes. So Venezuela at this point doesn't look like they're just trying to repatriate their gold. They're just trying to sell their gold so they have money, and they're willing to use the UN as an intermediary. Doesn't sound as though Venezuela is trying to get their gold back and Maduro's trying to run away with it. I think what they're trying to do is actually legitimately use it for their economy. Now, whether they're going to use it for, the military or whatever, it remains to be seen. But why is Venezuela's gold in the UK? The Bank of England is the second largest keeper of gold in the world. It has approximately 400,000 gold bars. Only the New York Federal Reserve has more. And it's one of the largest gold vaults in the world, over a 320-year history. And why does Venezuela want its gold? As I explained, despite the country's oil riches, Venezuela economy has been in free fall for years due to a combination of government mismanagement and corruption. So a lot of corruption going on with those communist regimes down there but they're desperate to get their gold. The Bank of England has held on to it. And the Bank of England's stance so far is it refused the request. It said publicly it did not come out on customer relationships. But the decision, however, came just days after Mr. Maduro's rival, Juan Guaido, had declared himself president, arguing the 2018 election was returned Mr. Maduro to power. So the Bank of England apparently is refusing to give Venezuela's gold over a political issue. I'm not sure if that's really relevant. If it's Venezuela's gold, it's Venezuela's gold. I don't know why the Bank of England has any say in that whatsoever. I am supposing that that means that the Bank of England may not have the gold or may have leased it out for some other purpose. I don't know this, but why else would they care if its legal title goes to Venezuela? And if they're having any sort of political issues, that's not for the Bank of England to intercede in that. So while the Bank of England never went beyond saying that it did not comment on customer relations, it thought the international sanctions on Venezuela and regulations on preventing money laundering influenced this decision. Sounds like a pretty weak excuse to me, but nonetheless, there you have it. If you want more on that, go to Wall Street Silver. Venezuela wants its gold back now, and you can see information on that. Another big story that we have that I'll share in just a moment. I'm going to go back to the chat and see how you guys are doing and who has entered. It looks like a Nazi YouTube is here. Mark M, welcome to the program. Philip Smith, hi from Saskatchewan, uranium capital. And Tim is here. Rick is here. Silverback Cafe is here. Welcome everybody to the program. If you want to ask a question on my live streams, all you have to do is hit that super chat and put your question in there and I'll get it answered. I'll try to scroll through the chat and answer other questions, but there's no guarantees. Once we get this up and running, there's usually quite a bit of people in here. Hi, Rick, how you doing? Good to see you. JR 1888, Marco Garcia, Wide Winger, everybody, thank you to the program. Okay, we're gonna go back to our stories. I got one more story before we get into the key presentation, which is the LBMA's battle with the BIS over NSFR and gold. And I've got a little bit of a different take than everybody else. I'll leave that as a teaser. But before we get back into that, I'm gonna go back to the share. So one of the other things I wanna talk about, other than Venezuela trying to sell its gold basically and use the UN as an intermediary, is what happened with London Vault Holdings data. You guys might have remembered about a month ago, I did a video on the movement out of COMEX over 40 million ounces. Actually, one month ago, it was about 2 weeks ago, 40 million ounces of silver out of COMEX. And then I was looking at different data flows across the world to see where that silver may have gone. So I came here to the London Vault Holdings data and looked at silver for the month of March. And it had a number here, I believe is 1.249 billion ounces of silver, which would have been an increase of 100 million in a month. And I looked at that and said, could they add 100 million ounces in a month? It was kind of sketchy. And this is what it looks like. Ronan Manley has it here on his website. The original number reported on the LBMA was 1.249 billion ounces of gold. This is thousands, so this would be 1.249 billion in March, which would have been an increase of about 125 million in a single month, which is a ton of silver coming into the LBMA's vaults. Well, now they have corrected it. They said we made a calculation error, and as of the end of April 2021, it's 1.15 billion, and the correct figure for March should have been 1.143. So they've now corrected that on their data, 1.143 here. So the London market doesn't have nearly as much silver as they had reported in March. Of course, it's something like 3,300 tons of misreported. They're saying it's basically a fat finger or a counting error. That's a really big counting error. One wonders if there's something more behind that. We don't really know. But this just goes to show that whatever is being reported on exchange, there are sketchy controls around who actually has what and how well those results are audited and presented. I've said before in both the London markets and the COMEX markets, I think the regulatory authority and the supervising authority over the reporting in the physical metal is pretty sketchy. So I really don't trust the numbers anyway, but this just goes to show that whatever is reported, you can't really count on. You can't take it, you have to take it with a grain of salt, essentially, that the reported numbers probably aren't going to be correct. All right, going back to the chat here, guys. Stoke Brokers is in. A Voice Deether is in. I think we've got it all loaded up. We've got over 200 people in the chat. Just a reminder, if you want to ask me a question, have me answer it on air here, put it into a super chat and I will pay attention to that and get back to you. All right, now we're going to get to our feature presentation, which is the LBMA versus the BIS and gold. Who will win? As I teased just a minute ago, I have a different take on this than a lot of commentators. And that's why I chose to publish this a little bit late. That's why I chose not to immediately go into publishing the story, because I wanted to do a little bit of research and thinking about it. And I'm not sure that I necessarily agree with everybody else on what's going to happen, but we're going to have some resources for you. I've got a PowerPoint where we're going to walk through it, but there's some resources we've looked at before and a new one we haven't. This is the new report we're looking at. It's from the World Gold Council and the LBMA, and it's called The Impact of the NSFR in the Precious Metals Market. This has been making its way around Twitter quite a bit and on YouTube. And again, I wanted to take some time on this. It's like 58 pages. I really dove into it, did some additional research. And again, I've got a different take on this than most people. We'll also be referencing this paper that I addressed a month or two ago, the Basel Committee on Banking Supervision, the Net Stable Funding Ratio paper, which was published in October 2014. I've referenced this before. This will be another one of the references I use in today's presentation. And then I wanted to talk a little bit about the BIS. Who is the BIS? Well, here is the organization governance chart. It has a group of governors and heads of supervision, the GHOS. The chairman is Francois Villeroy d'Agalhou, the governor of the Bank of France. And then you have the committee. The committee, the BCBS chairman is Pablo Hernandez de Cos, governor of the Bank of Spain. And then you've got all these working groups under it. And then you have the secretary, which is Carolyn Rogers. So that's who the Basel Committee is as a part of the BIS. Just wanted to throw that out there in case you guys were not aware. So again, these are the three resources that I'll be using today in the presentation. And we'll go ahead and get started with loading that presentation, and we'll get into it. Once again, welcome Dude Boy, welcome Eric Chiasan. We're at 240 subs. Remember, Super Chat if you want to ask a question. Let's go right into the presentation. The name of the presentation is Basel III NSFR versus the LBMA. And the LBMA's quite detailed response on gold's role in the system, and why I think I may actually agree with the LBMA on this one. Let's go ahead and get the presentation started. So we're going to go to the first slide, which is who is the LBMA? So right here in the paper that the LBMA published, they are the independent authority for precious metals representing the global over-the-counter market. Their mission is to ensure the highest levels of leadership, integrity, and transparency for global precious metals, so on and so forth. Getting down to the second paragraph, it says here, the London Precious Metals Clearing Limited, LPMCL, was created by the LBMA members in 2001 for the specific purpose of developing and administering a system for the clearing and settlement of gold and silver transactions. So LPMCL is the clearinghouse for the LBMA, okay? It's a not-for-profit company owned and operated by 4 banks, only 4, HSBC, ICBC Standard, JP Morgan, and UPS. The default settlement location for most global OTC spot gold and silver is Loco London using the LPMCL account. And this type of account is referred to as an unallocated account. The member's balance sheet treatment for unallocated account means that the metal amount in ounces is treated as an asset and the client's credit is treated as the corresponding liability. So that's the basics of LBMA, LPMCL, and the 4 member banks, which are again, HSBC, ICBC, Standard Bank, JP Morgan, and UPS. All right, moving on. You know, one of my mentors in my career when I was working for the Big Four said, Rob, if you listen to people, they'll tell you both who they are and what they want, and all you have to do is listen. And this is a great lesson for me because it taught me to listen more and talk less and listen to what people were saying. And what the LBMA is saying here is that gold is the ultimate currency, which I think is an astounding revelation because so many people in finance for years and years and years, especially since 1971, has said that gold has lost its monetary attributes. Gold is just an asset class. You know, you can't earn interest off of it, which this paper disputes, by the way. It offers data quite convincingly that you can earn interest on gold through leasing. But in any cases, I think the LBMA is trying to dispel here the fact that gold is not currency. So it says here right in the paper, the PRA should note that when gold is deposited and lent, it's treated as the currency by market participants. And when functioning as a currency, gold has no cash funding requirement when used as the underlying asset in financing transactions. An appropriate regulatory treatment would mean that gold loans backed by equivalent deposits from central banks would not be negatively impacted by the NSFR. In other words, they're saying gold is a currency here, not a low quality asset or a high risk asset, as the NSFR is kind of trying to treat it as, or at least discounting gold as a currency. HQLA stands for high quality liquid assets, and the LBMA is making the case here that gold should be considered the ultimate high quality liquid asset. even though Basel III does not specifically and explicitly say that. It says the LBMA is saying that the PRA should also review gold's position as a high quality liquid asset. The LBMA, the World Gold Council, and the members of the market that they represent each believe that gold should be reclassified as an extremely high quality liquid asset. In other words, the highest quality liquid asset. I happen to agree with the LBMA here. I agree 100%. The position is justified by the trade data that members have been reporting to LBMA since 2018. This quantitative data confirms that gold retains consistent liquidity characteristics of extremely HQLA and proven to be highly resilient to global liquidity shocks, such that as early as 2020. So there are 2 study papers that are attached to this paper that I'm talking about. So the LBMA has their reasoning why gold should be treated as a currency and as a high quality liquid asset, but they also have 2 papers behind it, which showed during times of turbulence, once during coronavirus and I think during the last recession, in which gold had tighter spreads, was more liquid, and was more sought after than things like stocks and other things like that during global crises. So I think the LBMA, they had submitted this research previously to the Basel Committee, but this time they actually published it in a paper and put the research behind it. So I actually got to read through it, and I agree 100% with that research. It's really good research, and it really shows us why gold should be considered the asset of last resort and the highest quality currency. So again, I agree with the LBMA so far in this paper. LBMA admits that gold is the asset of last resort. Now, this is astounding because the LBMA is supported by commercial banks, right? And the LBMA facilitates transactions between commercial banks, producers, merchants, central banks, so on and so forth. And it's rare for people to admit that gold is the asset of last resort, but look at what they say here. Precious metals markets are used daily by a wide range of market participants, from central banks to jewelers to mining companies and manufacturers. Gold is the largest and most important precious metals market. Gold is used in a wide range of consumer goods, industrial processes. It is also commonly used as a safe alternative to foreign exchange currencies, in other words, cashes of the world, and is the ultimate safe harbor asset, offering zero credit risk and high liquidity characteristics for both professional and retail investors in times of uncertainty, as was evidenced during the early COVID period of April-May 2020. The data available from this period suggests gold characteristics as an extremely high quality liquid asset. Now, again, that research is in this paper. I'll have the link to that paper at the end of this presentation. If you want it, you can go look at it, and the research is very clear. And I think it's great that the LBMA is admitting that gold is the asset of last resort. It's basically, the liquidity is great. It's better than basically any other financial asset during times of crisis. I agree 100%. So far, I have no qualms with what the LBMA is saying. Now I'm going to stop a share real quick. I'm going to come back to the chat and see if you guys have asked any questions. I do not see any questions in the chat. Checking the sound to see everything is fine. Raise your hand if you can't hear me, but if not, we're going to keep going. All right, we will keep going, guys, with the report that we have, the presentation that we have. So essentially, the LBMA admits that gold's asset of last resort, and we're talking about which gold is being focused on. So the NSFR, the net stable funding ratio, is really discounting unallocated gold. And unallocated gold is gold that's not held on the balance sheet, at a bank or depository institution as its specifically owned asset. We're talking about unallocated gold. That's what makes up the London OTC market. Now, most of the trades that occur in London OTC by mission of the LBMA are not directly gold for cash. They're really a derivative transaction, so you can get exposure to the gold price, and it's sort of there's a paper derivative on top, but you can get access to that gold, and the OTC market does facilitate that gold. However, since it's unallocated, meaning it doesn't belong to any specific entity, it's just on the member bank balance sheet for use in transactions, as the gold is flowing from like a producer to an eventual merchant or from one banking entity to another. It's unallocated, meaning it's not owned by the banks that are holding it. They're holding it for purposes of facilitating that trade. And we're talking about the unallocated metal. So looking at the second section here, the majority of precious metals held by LPMCL, those are the clearing banks, for clearing and settlement purposes is unallocated metal. And because they're clearing banks, they're holding that metal to facilitate the trade. They're not holding it on their books as an asset. So it's held off book, okay? And it's considered basically in process. And this is the main argument the LBMA makes. That gold is in process from one entity to another, So we're not counting it as an on-asset balance sheet item. Therefore, it shouldn't be subject to NSFR requirements from Basel III. That's the main argument they're making. It says here, this is metal deposited with clearing banks by market participants. It is an account where specific bars are not set aside and the customer has a general entitlement to the metal. This is the most convenient and cheapest and most commonly used method of holding metal, which I don't disagree there, by the way. The holder is an unsecured creditor. The metal, therefore, can be used by the clearing banks to clear and settle physical precious metals transactions between market participants. And the unallocated metal is fungible and as such provides the liquidity of the clearing and settlement system. Further, it allows the clearing banks to debit or credit market participants' accounts with metal immediately before the seller's metal is delivered to the buyer, which usually occurs within 2 working days. Unallocated metal deposited with the clearing bank is recorded as an asset and is held on balance sheet. It is subject to the proposed RSF calculation. And they're saying that it shouldn't be. This is the argument. Precious metals are recorded on the balance sheet of LPMCL members and are accounted for as assets subject to the 85% required stable funding factor. So without getting into all of the different acronyms in terms of Basel III, essentially what this means is when you have unallocated metal, it's being reported on balance sheet, and that required stable funding ratio requires these banks then to back up that gold with 85% high quality liquid assets such as cash or other high quality liquid asset derivative products. And the clearing banks are saying, why would we do that? This gold is in transit from one to another. It's a trading market. Why do we have to back that unallocated gold up with other assets of high quality liquidity? Because at the end of the day, we're not keeping the gold. We're not using it to capitalize the banks. It's trading. This is the argument LBMA is making. And I don't necessarily disagree with that. But they're saying there's no offsetting effect. As a consequence, credit institutions would be obliged to hold stable funding at a value of 85% of precious metal assets. In such circumstances, clearing and settlement will become a significantly more expensive business for MCL members, and we would expect that one or more members would exit the market and cease clearing and settling transactions. And remember, there's only 4 members, 4 banks we talked about earlier in the video. So if any of them leaves, that's a big deal. 25% each time one of them leaves. And if all 4 of them leave, there is no market. They say here currently there are 4 members. It would be extremely difficult to attract new participants. They say, I don't know how true that is, but this is what the LBMA is saying. So putting this in plain English, what are they saying? The Basel III regulations treat cash as king, but they treat unallocated gold held on balance sheet as a risky asset. Therefore, the required stable funding, or the RSF, must equal 85% of unallocated balances, meaning unallocated gold is treated as an asset with high risk and need of more backing. And what the participating banks in the LPMCL, of the LBMA are saying is that essentially we're not holding this to fund our banks. We're holding this for the trade and for this trading market. That's their argument. The LPMCL banks would realize much higher costs from capitalizing unallocated gold positions with the new requirement of the required stable funding ratio as a part of Basel III, which would take effect supposedly this coming June. And with only 4 participants, it would likely collapse the London OTC market. So a lot of commentators have come out and said that Basel III will collapse the LBMA. I don't disagree with that part. If it's a requirement that unallocated positions in the London OTC market would be backed with 85% cash or similar type of asset, it would significantly raise costs and would disincentivize banks to participate, and one or more would drop out, and eventually that would, I think, collapse that market. And the question is, why would anyone want to do that? And we'll get to that further in the presentation. What is at issue here? What is the issue? The LBMA has repeatedly said that physical gold is a high quality liquid asset and should be treated as such. I 100% agree. And even if it's unallocated, as long as the creditors have claims to that gold and that gold is going to settle physical transactions, I don't disagree that that physical gold is a high quality liquid asset. Any derivative on gold should not be considered high quality liquid asset, because that's where you get into where you have multiple claims on a single ounce or a single bar. But where it's physically traded, I agree, it's a high quality liquid asset. The LBMA therefore is asking for acceptance of unallocated gold as a high quality liquid asset. And they submitted data to show the stability of gold in market turbulence. Again, that's in the paper, which there'll be a link in this presentation for you if you want to go read those 2 research studies. The regulators have not budged. The BIS regulators not budged, so the data did not convince them. And the question is this an issue with the unallocated gold or the LBMA system? Is the BIS trying to break up the LBMA system, or do they really have an issue with the unallocated gold? Meaning, when the BIS looks at the trading data that the LBMA has submitted already, recently submitted, Did they look at it and say there's not evidence that actually all of that unallocated gold actually exists, or is there some other issue with that system, some other liability that we don't know? Or is the BIS issue with the LBMA system itself? And that might be the bigger key here. The LBMA also in this paper goes on to state that alternatives to the OTC system are untenable due to other restrictions of Basel III, which appears to be correct. So this is something I did not recognize in my previous 4 Basel III videos that I did, because this wasn't a point brought up. And when you go through all of the requirements of NSFR and the Basel III, there's a lot there. But the LBMA is basically stating if you got rid of the OTC system and you went to another system, then there would be higher costs due to the same Basel III requirements on that system. So it would raise the cost. And they appear to be correct. So some cursory research I did on this led me to believe the same thing. It led me to support the LBMA's claim that if you got rid of the OTC market, it would make getting gold through that market more expensive. Now, does that mean that we shouldn't get rid of the OTC, that that's not some sort of oligopoly that we should deal with? Potentially we should get rid of the LBMA and maybe some of the collusive and other questionable practices that go on in that market. That being said, the question is what comes next? So consequences of NSFR to the LBMA. So this is what the LBMA says the 4 main consequences could be in their paper if they have to abide by the NSFR and back up their unallocated gold with 85%, high quality liquid assets. They say that the required stable funding for short-term assets would significantly increase costs for the clearing banks to the point that some would be forced to exit, and it may even collapse it. And I don't disagree with that. It would drain liquidity. The required stable funding would dramatically increase costs for remaining members taking gold on deposit to be held as unallocated metal relative to the cost of providing custody of allocated metal. This would prevent LPMCL clearing banks from holding unallocated metal and drain essential liquidity from clearing and settlement system. I don't disagree with that either. I mean, the whole point of the OTC system is to do it as cheaply as possible, and to make sure gold is flowing through that system. Now, the question is about the derivative exposure in that system. And is that, is that not being accounted for here by the LBMA? Third one, dramatically increased financing costs. The required stable funding would penalize LBMA members who hold unallocated balances of precious metals. This would increase the cost of short-term precious metals financing transactions as stable funding costs are passed through to non-bank participants. And such cost increases would impact miners, restrict refining, and raise the cost of inelastic key input to industrial and consumer goods. This includes some essential medical equipment. So some people have panned this claim by the LBMA, and I'm not sure I completely disagree. If you got rid of the OTC market, would it be harder to find cheap ways to move your metal? Probably. New markets would have to emerge. There would be a time factor there. There would probably be some increased cost. How much would it hurt them? Honestly, I really don't know. It's been so long since we've really had an alternative system. I don't know if anybody really knows. We could guesstimate on it. But I think to some extent the LBMA is correct, but we don't know if we could put together a more efficient system. I tend to think we could. I think it would be less centralized and therefore less under control of those 4 participating banks and the LPMCL. But at the end of the day, we really don't know. Curtail central bank operations. Fewer LPMCL clearing banks may curtail central bank deposit lending and swap in precious metals. Those operations are essential to offset the cost of storing gold reserves and generating income. In addition, it provides important liquidity. So I'm going to read between the lines here on these 4 things. And basically what it's saying is this: it would disrupt the LBMA monopoly and open it up for further competition. 2, it would drain liquidity from that part of the system, not necessarily from world liquidity. It would increase financing costs, which is probably true. But the biggest point here, curtail central bank operations. If you got rid of this system, the OTC market and the LBMA, the central banks would find it harder to do their transactions, their swaps. I think that's a key there. So the BIS is proposing a system which would break up the current central bank swap and lease system. Now, is that good or bad? Because at the end of the day, you're still going to do leases and swaps, but it's that it wouldn't go through that market. In other words, the control of the central bank lease and swap market would move somewhere else. Where does the BIS want that to move if they don't want it on the LBMA? And further, the LBMA has long been supported by the Bank of England. The Bank of England has had ties to the London bullion market for forever, dating hundreds of years, and they've had ties to the LBMA since it started. So is this more about a power struggle between the BIS and the Bank of England and wresting control of that gold market from the current system and giving control to someone else? I think that may be the bigger point here. The LBMA has proposed a solution. They're saying interdependent assets and liabilities. They note that Switzerland proposes to treat precious metals assets held by banks resulting from loans as interdependent assets and liabilities, therefore relying on the equivalent Article 428F. I've looked up that article. I ran through all the components of that article. The link to that article is here in the bottom of this slide at lexparency.org. I went through it and I didn't disagree with what Switzerland proposes here to treat precious metals. It would exclude the majority of precious metals held by Swiss institutes from the NSFR calculation. And I don't disagree, because when you look at 428F CRR2, you know, it treats it as like a pass-through, which the OTC is. It's a trading hub. It's not held for long-term to be an asset on the balance sheet of the bank for purposes of capitalizing the bank. It's meant to be a trading market. And when you look at 420F2 CR2, I don't necessarily disagree with Switzerland's proposal. LBMA says that 428F CR2 may offer a viable means to at least safeguard clearing and settlement for precious metals transactions, meaning clearing and settlement means trading of. We believe that the system should be considered a market utility, without which precious metals transactions would take many days to settle, resulting in increased settlement risk. Within the 4 clearing bank members of LPMCL that provide the service, there will always be a corresponding asset and liability for every transaction. So they're saying it's a transaction, asset, liability. We're balancing the books. Note that this is not a novation agreement where a central counterpart takes on all credit risk, but simply a mechanism where the client instructs the clearing bank to make or take delivery. So in other words, the OTC market is not where you have a central clearing hub that takes all the risk, kind of like the COMEX, which guarantees all the trades. It's more of, it's an asset and liability. There's a trade, and the LBMA and the LPMCL is just facilitating that trade. Therefore, it should fall under this other article of the Basel requirements. So they note, therefore, propose the PRA exclude the clearing settlement of precious metals transactions. Now, again, I can't disagree with this. I'm not disagreeing with the LBMA here. I'm not disagreeing with how they're categorizing gold in this solution. And I'm sure somebody will tell me I'm nuts, but I don't see the issue with what the LBMA is proposing here. I think this more has to do with the power struggle. I think here are the key questions about what Basel III really means. Now, I've said before that Basel III would help gold retain status and enhance its status as a high quality asset as long as it's hedged in a derivatives market. But I think that's because Basel III is focusing on cash is king. Honestly, I don't think cash is king. I think gold is king. And I do think that gold should be treated as a high quality liquid asset. I agree with the LBMA there. And I think that's one area which the Basel III has undervalued gold. But what did the European Banking Authority and the Fed see with regards to the London OTC market that they still question? So the OTC, the LBMA went to the European Banking Authority and the Fed and said, hey, here's data showing the trades. Why are you still wanting to cause us to back up our unallocated gold positions with 85% of some other high quality liquid asset? So what did the European Banking Authority and the Fed see there that they didn't agree with? That's a question I haven't seen answered. The EBNA and the Fed basically said, we don't agree with the LBMA, but why? I haven't seen the position papers that really outline the specifics of why. So what did they see about that London market that they don't like when they looked at the data? That's a key question here. And, I can't fully comment on whether the LBMA is right or wrong here until I know the true objections of the European Banking Authority and the Fed. Are the regulators, in this case, the BIS. They're not really regulators. They're sort of standard setters. And if you look at the BIS website for these regulations, they don't have teeth in them. They're more recommendations, but the banks tend to take their cue from it. So are those regulators trying to break the market mechanism for the gold trade? Why would they do that? Who does that benefit? Obviously, if you're breaking up the LBMA, you're hurting the Bank of England's relationship, in the London gold market's place in international gold. So that would go somewhere. They're going to form another market. It's going to form somewhere else. Does it go to China? Does it go to Europe? How does it benefit the BIS? These are key questions I think that need to be answered. To me, this is not just about gold's role in the system. I think it's very clear that gold has a stronger role in the system. And I think that's clear by the Basel III requirements. But I almost think as though the Basel III requirements were written to disrupt the current power centers in international gold trade. To me, that's more about what this is about. So the key question is, what replaces the LBMA for facilitating international gold trade and gold lending in the supply chain? In other words, who gets the power around gold? If it's the ultimate real asset, which the LBMA admits to in their paper, who gets control of that market. And this is part of the Great Reset. But as I talk about the Great Reset, I'm going to give you some of the resources in the paper. So here's the top one's the letter I was talking about, that the LBMA is basically saying, hey, we want to recategorize gold here according to Switzerland's argument, at least, and not have to back up our unallocated gold with 85% cash or whatever. And also put the Basel III NSFR rules in there. I've looked at that paper a bunch of times, but I put it here for reference for you guys. But the key question here, guys, is, why? What is going on here? Is this part of the Great Reset? The Great Reset, we know, a large component of that is central bank digital currencies. It's about taking gold more to the core of the central banking system and getting it out of the hands of the retail market. It's more about putting some sort of derivative, an electronic derivative, in the hands of the people as money. So is this move to disenfranchise the Bank of England and London from the international gold trade part of that Great Reset? And who benefits from that? What is that for? I honestly don't know that question, but that's to me more about what this is about than it is about how gold is treated in the system. It's more about taking power away from the current centers and that power going somewhere else. And I have a feeling it relates to the Great Reset, but I'm not putting it all together quite yet. I haven't made my final conclusions here. I've got a feeling something's going on, but I need more information. The auditor in me is saying, there's a little bit more information that we need here, guys, to figure out what's going on. I do believe now more than ever that the LBMA is fighting for its life. I think if they choose not to be a part of those Basel III recommendations for funding the banking system, they're going to be ostracized. They're going to be put aside. I think eventually, if they were to try to adhere to the NSFR, it would collapse the OTC market. And I think they know that would be the end of them, and that's why they're fighting back. I don't disagree with them on many of their points. And the key question is, who's taking over? Who's trying to take over in this power play through the Basel III NSFR requirement and related to gold? Who's taking over the gold market? Is China involved in this? Is it the European Banking Authority? Who are the players here? You got to look at the players and see who benefits from this. Whenever you have something like this come out, which is foundational to the financial system, it's always who's trying to take power from whom, who's trying to control what. And that's the key question. So I'm going to be following this, guys. I'm going to be following all the way to June. I promised that I am going to do a video in June about Basel III and about NSFR, so I will still do that. But I really wanted to bring this to you guys because something fishy is going on under the surface. And I want you guys, if you find research, I want you to email me, contact me. If you have an opinion on this, feel free to reach out to me. I'd like to hear it. There's more pieces as of yet to put together to this little puzzle. I'm not convinced we're done here on Basel III, and I'm not convinced we're done here on the changes that are coming to the banking system and how all Basel III relates to the Great Reset. It is part of the Great Reset, and there are more questions to be answered here. So we're gonna continue to follow this, guys. We're going to continue to comment on it. We'll be back probably before June to talk about this, but for sure in June, before June 28th, to talk about how Basel III could change. At the end of the day, I do think in a lot of ways it's going to help us find truer price discovery in gold, unless the system that we get is worse than the one that we have. And that's my concern here. And that's why I want to watch this. So guys, if you have questions, feel free to put them into super chats. I don't see any. Thank you everybody for joining the program. Very grateful is here. Jacob Siegel is here. JJ Stacken is here. Danny Fott is here. We have about 500 viewers right now. Thank you everybody for joining the channel. We appreciate that. We love interacting with you on Sundays to do our live stream here in Cowboy Metals. And we call it Cowboy Metals because we're in the great state of Texas and we don't take a lot of BS. And this is the no BS live stream zone. Just a reminder, if you guys are interested in the subscription newsletter, you can go to goldsilverpros.com and subscribe there. You also get access to the wonderful Gold Silver Pros University and also special publications, which we email out from time to time. Guys, I think this is going to about wrap it up. Thank you everybody for joining. Remember to go visit Wall Street Silver, look at that article on Venezuela gold and how Bank of England is not allowing Venezuela to even sell their gold and run the funds through the UN so that they can get what they need. So I think Bank of England may not have all the gold they say they have, which is why they're not giving it to Venezuela. And maybe that relates to what we're talking about here in terms of the BIS trying to shake up the world gold market. Maybe there is an altruistic goal here, maybe not. Maybe it's a power struggle. We don't know. More to come on that. Thank you so much, guys. We're going to call it a day. Oh, I have a big bombshell for you. On Wednesday, I'm going to be talking about a major global mint, and we're going to be documenting data about how this mint may be in serious trouble. This is going to be a big bombshell in the gold market. You do not want to miss this. Coming up Wednesday. We'll premiere it at 7 p.m. Central Time. Stop back by the channel. The big bombshell in the global gold market is coming, and we've got all the data that you're going to want to see. And I guarantee you nobody else has what we have here. So stay tuned to Gold Silver Pros. We're going to bring you that data and that knowledge that you can't get anywhere else. Till next time, thank you so much, everyone. We'll see you next time.
Well, good afternoon, everybody. Thanks for joining us for the JS Mindset Weekly Call. My name's Denny. Today is Saturday, May 15, 2021, and joining me on the call today are Bill Holter, Jim Sinclair, and the famous Dave. Well, it's another weird, wild week here in the world, and we are beginning to feel the rumblings of the metals markets coming to life. Now, it might just be indigestion of bad chili and spicy meatball hoagies, or it might be the beginning of twin eruptions of Vesuvius and Krakatoa about to blow. Gold and silver are just interesting to watch right now. Today, we're lucky enough to share some time with Chris Marcus of Arcadia Economics. If you've not had the chance to listen to Chris before, you are in for a treat. Classically educated with an MBA from Wharton and in the trenches education from trading options for Susquehanna International Group as a specialist on both the American and New York stock exchanges, Chris is an author and a talk show host. He's also a truth teller with a wicked sense of humor. He'll sneak in some nuances of humor while he's giving an economic perspective that pulls back the curtain of manipulation and deceit by market makers that should probably be facing the justice of the courts, if not karma itself. Before we get to the questions for Chris with Jim, Bill, and Dave, please be aware that in our conversation today with the boys, it's pretty important to remember we're not giving anybody investment advice. What we're trying to do is just share our own personal perspectives of the economic world. You can choose to add it to your own perspective. You can choose to ignore it. In the end, we want you to be prepared for what might certainly be some pretty crazy times ahead. So, Chris, first of all, welcome to the show. Thanks for sharing your Saturday with us.
Well, thank you. Geez, what a kind intro, and I love Mount Vesuvius and the volcanic eruptions. I mean, geez, I don't know if I can. I'll try and live up to that, but well described, and it's
well. All right. So let me just. I'll pitch you an underhand, a slow underhand. Here you go.
Ooh, all right.
What have you been finding that's going on in the silver market right now, buddy?
Well, I guess I've been finding more and more blatant, at some points, downright comical confirmation of what you guys have been warning people about for the last 10, 20, 30, however many decades. Jim, I know you were around when Hunt brothers were there. And
oh yeah, I'm the elder statesman here.
So I mean, it's stunning where it's like on one hand nothing new is happening, although on the other hand, maybe just the evidence is becoming so overwhelmingly obvious. I mean, I feel blessed. I didn't know that making jokes about banks in the middle of a silver manipulation could be a career, but I somehow I figured it out. And you know, you catch them lying one after another. I mean, you guys let me know where you want to start. Do we want to dig into the LBMA accidentally miscounting? Just, I don't know. Sure, it's a coincidence that, you know, you have these trusts at 118 million ounces, or just SLV alone, over this 3-day weekend, which you guys tell me, and Bill, I know you know Andy Scheckman. Is February 2nd, is there any, can we even debate whether it's the greatest single day of silver demand in history? Because we know from the ETF inflows on Nick Laird's Gold Charts or Us, since the trusts were invented, prior to that silver squeeze weekend, the high mark was about 20 or maybe even 25 million ounces in a one-day edition. Then you have January 29th, the Friday, they had 34. Then Monday the 1st, 20. And then on Tuesday the 2nd, they post a 61 million ounce number on the day that the price falls 10%. And Bill, you talked to Andy Scheckman. He's told me that for him, by far the most silver they've ever sold, by far the most call volume they've ever had, and they would have sold a lot more if they had enough people, if they had like 100 more people to place orders. So, I mean, maybe we could start there. How does the price fall 10%? And on the is there even a question of whether February 2nd is the greatest day of silver demand in history?
Yeah, it was definitely a logjam that day. I mean, literally, the industry needed more people taking orders because there were people that they couldn't get orders filled for a day or 2 days. And the only thing close to that was back in, I want to say it was April of 2013, when they destroyed silver over 2 days, and the premiums, the physical price didn't drop. The paper price dropped. The premiums expanded by exactly the amount of what the COMEX drop was. And that was pretty similar to what we saw back in late January, early February, but that was the beginning of premiums exploding.
Yeah. And then on top of it, we find out it wasn't just the bullion dealers. I mean, we can dig into this stunning LBMA report. I'm becoming a big fan. I don't just subscribe to their Twitter channel. I get the notifications too, because I thought that was fantastic journalism when, you know, after all the bullion bank, you know, you get Jeff Curry on TV February 2nd. Oh, you can't have a short squeeze because of position limits. Doesn't mention that Goldman routinely violates the position limits. And they issued 2909 contracts for the March cycle, which means he probably was short when he said that. He went on and lied about it again February 4th. That's when he gave that whopper of the shorts are the ETFs. They buy the physical and sell futures on the COMEX. Now,
which is impossible.
Well, I mean, aside from the fact that the prospectus explicitly prohibits it, but I don't know. I was on a trading floor. Maybe I was like a dropout and I couldn't cut it. But can someone explain, because even if there were anything to conceivably hedge, we're talking about SLV. It's a trust where if I give them my $25, they're going to give me 0.93 ounces of silver because they got to pay the audit fees, although they can't produce an audit. We can get into that later. But if I give BlackRock $25 and they're promising me exposure to silver, right? So if the custodian the sponsor is holding the money, if there was anything to hedge, if you said, all right, well, we have to do a long hedge, so if silver goes up $1 before they've actually bought it, they're covered. It's not even, I don't know. I can't find anyone who can even explain a conceivable scenario. And I don't know, maybe the guy, maybe he was nervous because he's on TV. I don't know, he's been doing this for a couple of decades. And at some point, if you're Goldman Sachs, you have the licensing. You guys have all been through this. You've filled out, anyone in finance has gotten nuts filling out paperwork up to their eyeballs. Fine. If he made a mistake, then it was a darn influential one, because that was the day the price of silver fell 10%. Of course, here's what I'm wondering. He was on TV February 2nd and February 4th, not the 3rd, though, and I'm wondering if that's because he was busy when they were changing the prospectuses in the contracts of SLV. In SIVR, where they actually, look at these bozos. They even said, you know, they put this stuff in because they were worried about online campaigns to harm large banks and hedge funds with large short positions. Okay, they confirmed the large short position. You can go.
There you have it, exactly.
You can go to the COT report and you see 4 largest traders. I don't look at it every week, but I mean, it's like 200 million ounces, 250 million ounces that they're short. It goes up and down a lot, yet I hear Jeff Christian, everybody else tells me it's hedging. Although I actually went through the Silver Institute report on the plane home the other day. I think they claim they could scratch out 40 million ounces worth of hedging. So I don't know who's, maybe you guys know part of the hedging I haven't seen, but you know, You call them, I call them. I've called iShares. I said, in fact, on February 5th, because I didn't think it was possible you could add 61 million ounces. Maybe if the price had gone up $20, possibly. But I asked iShares how it can happen. And actually, it's fun. It's too bad they're not open today. Maybe we could have called them live on the air. You just listen to their head steam. Or actually, here's a fun one. Call iShares and ask for the audit of SLV. And if anyone can get it, I'll pay 10 ounces of silver for it. 100 ounces of silver. If anyone can find the damn audit. I've called 3 times. They can't find it. They gave me an inspection letter stamped March 20th of last year, of 2020. That's all the iShares could give me. It was like some agency that we inspected. It was stamped March 20th, 2020. I'm like, that sounds familiar. I'm like, what was going on around then? Bill, Jim, Denny, Dave, you remember what happened March 23rd in the gold market last year?
That was the beginning of COVID.
Yeah.
No. That was the break of the EFT market, where HSBC lost $200 million in a day, CIBC got popped too, and a bunch of others that aren't quite as transparent. That was the 23rd. If anyone wants, look up the gold chart on March 23rd, because remember March 15th, that was the historic Sunday night announcement. Everybody's been waiting 50 years for it, and there's so much happening, people didn't even notice it. But that's Bernanke, or not Bernanke. I call them all Bernanke, but what's his name? Powell, Yellen.
Powell.
Deep state, exchange stabilization. Sunday night, May 15th, they say quantitative easing. 8 days later, March, not May, I'm sorry. March 23rd, that's the day that the EFP market broke. These banks got clobbered. All heck broke loose. And I'm like thinking, because I remember my trading floor days where, and you guys know how it is, where the company has crappy news. They announce it after the close on a Friday and hope people drink enough over the weekend that they don't remember to sell all their shares by Monday, right? So that's when they announced that the inspection was done. But it gets even better because the actual dates of the count, the last date was March 6th. And I think it's March 17th or 18th. So like less than 2 weeks later, price of silver is under $12, despite most miners costing $15 to get it out of the ground. And even on the day where it goes below $12, you see SLV adding silver again somehow. But so far, the CFTC, I can't get them to comment. I mean, they talk about tamping down the price, but even though I've submitted all this evidence February 12th, I mean, I reported it as was happening. Bill, I've heard you do it. Jim, I've heard you talk. I mean, everybody's got common sense and is following this. Reported it as it was happening. I took the time to sit with the lawyer and write the whole thing up, which took a day or two, and submit it on the 12th, another round on the 23rd. And when I asked even CFTC, have you reviewed, they've told me I got their form email that they received it. I said, have you actually reviewed it? Because here's Ralston Benham, who, by the way, was named acting commissioner January 21st. You had a couple guys leave. There's like Tarbert left. A lot of guys switching in and out of there right in the middle of January. And then this guy goes and says on February 1st, hey, on the day that, oh my God, I didn't even piece this one together before. So his comments, where later he talks about tamping down the market and the future structure and how scared they were, that happened on the day he launched his silver investigation. And then the day after that, the price fell 10%. Because basically they got caught. The LBMA confirmed they were getting their doors blown off and they were weeks away from running out of metal. Although, as we've seen, their accounting is a little sloppy, as bankers often are. So I'll help there. I'll help LBMA. Since you guys can't figure this shit out, here's how it works. Because in your stupid report, you said you had 360 million ounces left. Which means basically if every American buys 1 ounce at a coin shop today, LBMA is done. But they said you know, we had this 120 million ounces go in over Silver Squeeze weekend, and, you know, their words, they were scared. Oh, sorry, we got
I posted that interview, Chris, and I'll repost it along with the interview. When Benham was speaking and talked about they were getting smoked, but they tamped down the silver market. And then this recent one that you uncovered, the discussion between the CFTC commissioners. So I'll post both of those.
Yeah,
or repost them.
I guess what hopefully this is coming across is like what's just hitting me as we're talking about it now. When now was posted March 18th, when Benham talks about how the structure of the futures market tamped down the price of what could have been a worse situation. That happened February 1st. So the day that the futures market structure is tamping it down, and then later, you know, the guy doesn't have a very good internet connection, so the word, it seems like he had to have been saying the agency did X, Y, and Z, because X, Y, and Z were things that only the CFTC could do, but the word agency gets cut out in the recording. Hey, if he can answer it, please let me know. But he's saying the what did he the margins, the contract limits, all these features that were used to, in his words, to control the price and the volatility.
Right.
Now,
it was an outright admission.
My background, I'm not saying Moody's is, I mean, these are the same bozos who have AAA on U.S. debt. And then I went to Wharton to learn Keynesian economics. Was trained well. In fact, I would bet on Susquehanna in any sort of gambling competition, anyone in the world, blindly. Hey, maybe I'll lose this. But I was trained well. And then a year following, a decade getting into silver and gold since then, I've never heard of anyone say anything like that to begin with, and let alone I've not found anyone yet. Is that not? How is that not price fixing? It's not. I don't want to get caught up in semantics. But if someone can explain, and then the guy, of course, he's talking about how transparent the agency is. Makes comments that sure make it seem like he was either condoned, if not an accomplice to, and those comments he made. We're referring to February 1st, the day he launched his investigation. So it goes up $3, and he tells you how scared he is. The LBMA tells you how scared he is. But what are they so scared of? People bought silver. The price is supposed to go up. What am I missing here? Is it a free market? Or do we have, like, okay, fine. If there's a cap at $30, then let me know, and I'll go sell call options to the banks, and I'll take their strategy and watch the price pin. By the way, we could talk about my friend who used to work in the sugar pit and how he saw the same damn exact thing. But okay, fine, all right. So then at least tell people that there's a future market structure that the thing's not allowed to go over 30. Actually, here's a question that maybe someone can answer. How is it that on January 28th, before this 3-day period, silver is over 26.50, I believe. I'll pull it up here again. Well, I'll get the exact number. But whatever it is, you have one price January 28th, and by the end of a 3-day historic buying spree, that all
exactly the same.
You don't have to take my word for it. Okay, here we go. January 28th. The red line here, so it's under, the price is under $25.50 at one point. Goes up above $26.50. It spiked up about $1. So on January 28th, before this started, you have a price above $26.50, and then by February 2nd, after all this buying that these guys told you they were panicked about, you don't have to take my word for it. There, you see the price on 2nd goes even below $26. So why do we even have a fucking silver market? What's the point? And then you have Jeff Christian out there telling everyone how, well, these guys who say the COMEX, 97 to 99% of contracts are rolled over. Yeah, that's exactly the point. In fact, if I may, this is from Paul Sarnoff's book, The Silver Bulls, 1980. And he's writing about 1979 in October.
says 97 to 99% of all contracts had always been settled by their sale prices keep the current value of silver. But that October, it became startlingly clear that several of the largest silver longs intended to evoke the letter of their legal rights and demand delivery. And you saw what happened. So it's one of those things where, all right, yeah, you can sit there and say, well, oh, yeah, it does always get rolled over. Great. The housing bonds always got rolled over until Greenspan tried to take up interest rates, and it imploded for the same reason that every other Ponzi scheme and every other money printing and every other currency has imploded throughout history, and it's not going to be any different this time either.
Hey, Chris, let me just interject for a second just so the listeners can understand. Silver, because it is such a small market, is the Achilles tendon to the entire global financial system. Because if the silver market blows up, obviously the shorts that are levered, all shorts are done with leverage. Silver blows up and it spills over to gold. And then it spills over to other markets and eventually affects the ability of the U.S. Treasury to issue debt. It affects the value of the dollar. Call silver the fuse. If silver gets lit, the whole system goes like dominoes. It's not an isolated market, and it will expose the fractional reserve nature of the entire system.
I agree with a lot of what you're saying, although I have a, not right or wrong, a counter thought, if I may.
Fire away, please.
So I've heard there was some guy on Kitco, and then Jeff Christian was talking about the cash settle. It's been about a decade since I read through the contract, but I know, David Morgan, you guys know better than me that if you go through the actual contract, they can cash settle, right? So you also, it was interesting, there was several interviews.
Hey, Chris, they can cash settle if you accept it. As the owner of the contract, you have to accept it.
They can't force the cash settle?
No, it has to be acceptable to you.
Well, that's interesting.
That's my understanding.
Well, let's offline talk more about that, because that would be an important distinction. Because even there's several times Rick Rule, who, you know, he's running the Sprott thing, so, I mean, has buying power, and he was even talking about, he's like, you know, anyone who thinks the COMEX is going to get smoked, you know, the COMEX is going to do what's good for the COMEX. I mean, they're going to screw their customers. I think that part they've made clear. But I guess what I've thought is, like, when you think, how does this ultimately end? And again, Bill, if you're correct, then that would be, I'll have to revise this, but let's assume for a second that they can cash settle.
Then they never have to physical settle.
Yeah, because if that's the case, if that's what, or I mean, you know, hey, why do they even? I mean, why are they going to let the law stand in the way now? I mean, they already slipped it in the. I'm sure they have something. They'll change the prospectus when no one's looking, like they did in the other ones. But if they choose the cash settle, you could actually make the gold and silver price, the bigger the better for the governments. Let's say they make the price of gold $1 million an ounce. You know, maybe they have like like a 1 bar left in Fort Knox. They make it $1 trillion. In fact, I heard they were actually serious about that $1 trillion platinum coin.
Platinum coin, right?
I used to think it was a joke, but think about this. Let's say you made the price of gold $1 million an ounce and the price of silver $100,000 an ounce, and the banks, if they cash settle, and they just say, like, all right, if you have a COMEX contract, here's your $25, or here's your $18.50 for gold. The only loss they would have is closing out the open loss, you know, that they've been short on. But hey, that's like a keystroke from the Fed's discount window. And then you don't have banks going insolvent. You probably wouldn't even have people in the public noticing. I mean, it's, they do QE and everyone's like, all right, as long as I get the stimulus check, fine. You wouldn't have, in fact, the higher the number, because the reason that I think it's plausible is not, hey, I don't think the banks are going to do anything because of what I say, but like the higher the number, the more debt they wipe out. In fact, let's say, at $500,000 an ounce gold is the government's break even. I'd imagine they're sitting there saying, hey, well, we're break even here. Why don't we've still got a couple ounces left, make it $1 million so we have some more money to spend and print. They're going to do that. Go ahead.
That's on the one hand, as far as you're looking at it from the debt standpoint. Now, back up and look at it from the currency standpoint. So if it wipes out the debt, it also wipes out the currency.
Which would probably be true, but I mean, this is just my opinion. I know other people see it differently, and I don't know that this is right yet. I think at least for me, I take a step back between, I know we see the U.S. or China or, Russia as there's competing currencies, but I see bankers that manipulate all currencies. I mean, they go back and what is the guy, Mark Carney? Wasn't he doing Canada, and then he's in the the London bank, central bank? I'm like, which team is he on? You see guys go from, people say, oh, is it the banks or is it the government? I say, can you tell me the difference between the two?
It's both, obviously.
So, I mean, this is, again, speculation, but Goldman Sachs, they're not U.S., they're not Chinese, they're money whores. It's like the mafia. They go wherever they can steal money. CIA the same way. So, yeah, I mean, they're already talking about, maybe they'll send out more SDRs, or I don't know what the details will look like. In the same way, it's like nobody could have imagined something as silly as quantitative easing that, or I guess we could have. The Japanese were doing it for decades, and then before Bernanke. But is this really different from how you had LBJ take silver out of the coins? You had the London gold pool start unraveling. It wasn't an accident that these, as you guys know far better than I do. So you went from London gold pool, a couple years later, you had the COMEX and the CFTC. They just changed the name. In fact, I'm hoping they call the next bullion banking scheme after this one unravels. I don't think the government, I don't think Bush's, Clinton's, my guess is they couldn't give a shit. Dollars, I hear they steal a lot of gold. That's what I hear. I don't know. If they want to come on my show, I'll be happy to discuss it. I just read a lot of books and see evidence, but I don't think these guys care. So, yeah, on one hand, there's a lot of, power in the dollar, but if the guys running the dollar already have the next scheme cooked up, which, now on one hand, there's a lot of people that personally I don't think are all that bright, but you would think someone in one of these banks could they at least buy a pass to the JS mindset? You guys explain it. I was able to get it. So you'd think someone realizes this is on borrowed time, and if they hadn't yet, maybe Goldman read the LBMA report. Or maybe they don't get it. I don't know, but it's like, I don't know what else they can do. They're running out of the metal. Their words, not mine.
Right. Chris, you mentioned 20 years ago, 30 years ago, Japan was doing QE. I would just mention that 20, 30 years ago, if anybody would have said that it was going to happen in the U.S., the response would have been, that's impossible because the dollar is the world's reserve currency. And you can't QE, MMT, whatever you want to call it, the reserve currency. You could do peripheral currencies, but not the reserve currency. And that's the crazy thing, is that they've done it with the reserve currency, which, as Jim has mentioned many, many times, you can't measure the strength of the dollar by the USDX because you're measuring a turd with a whole bunch of other turds.
Yeah.
So you could have that whole index get smoked, and a cup of coffee costs, $100.
I think it's like 70. It may have changed a little bit, but a couple of years ago, 70% of the dollar index was the euro and the yen. I mean, you have Shinzo Abe. At least I'll give Shinzo Abe of Japan credit. Sorry if there's any Japanese people who are fans, although you deserve to know. I mean, at least he's an honest politician. He campaigned and said, I promise hyperinflation, and he delivered. I mean, at least he's honest. That's the problem that bothers me with these American banks and the CFTC, and why I'm leaving the country for the second time. Because here, all right, they get caught, but it's like the same with like when the baseball players got caught with steroids. It's like someone slipped into my supplements. I lost it in the sun. Nobody ever is like, hey, you know what? You're right. I did it, and everyone says they're sorry, but they're not sorry. They're sorry they got caught. But if you were actually sorry, you would have stopped doing it, or you would have said, hey, I'm going to make it right. Or if Rostin Benham's really transparent, hey, fine, ignore me. But Bill, do you have the same questions? Would you like to know? Would you like the secret CFTC decoder ring so that for your trading you can know when it's going to be tamped down again? There's I don't know if you guys heard this other guy, CFTC Giancarlo. This guy bragged in 2000. He went and did a speech, 2017, saying one of the untold success stories of the Trump administration was that they popped the Bitcoin bubble. I'm like, okay, I got to read this one. So he mentions, the Treasury Secretary, Steve Mnuchin, Goldman Sachs. He even mentions Gary Cohn by name. I'm like, Gary Cohn, that's that guy Goldman, and a bunch of other goon agencies. And he said that they took the initiative to pop the first bubble since the housing bubble, and they decided to pop it. And I'm thinking, all right, I know I read these silly Austrian economics or free market textbooks, but right off the bat, hey, maybe Bitcoin's a bubble, maybe it's not. We'll leave that aside. But he just said, we played God in the markets. They decided. So that raises a question that I've never heard Giancarlo answer. Did Goldman Sachs, their clients, did their executives, did they get to short it? But it gets better because, also, he says, first bubble since housing bubble. I guess it's weird because he mentioned the Trump administration, but he must not have seen that clip that I saw, and I think you guys saw, where Trump's bashing Hillary Clinton. Not like she's any better in my opinion, but, saying big, fat, ugly bubble in the stock market, Fed's using politics to manipulate it. So he says that, but I guess maybe Giancarlo was watching him plead for negative interest rates while he was president, but then he says that we use the advent of a CME futures contract to pop the bubble. Again, I'm not making this. These are his words. I'm not guessing that, well, he winked twice, so that's what he was inferring. I mean, the fucking man said it, or at least is reported as having said it. So it's
an outright admission. It's an outright admission.
Bill, where could he have learned that adding a futures contract would crush the price? Maybe it's the same futures market structure that his buddy Benham was making with Goldman Sachs, Citadel. I couldn't believe that there's video footage of it. I thought I was like, oh man, I must be dreaming this. That's the wild part, is that please, anyone, if you think I'm making any of this up, that's probably a sign you're still sane in a increasingly socialist influenced world. Fine, I'll say it, and you can like it or not. It's what I feel. It's, at least is my honest belief. Maybe I'm right or not, but you go and
Chris,
listen to the statements.
So, Chris, I just came across this 2 days ago or yesterday, a posted video of the CFTC commissioners, and I think your name came up 4 or 5 times. You want to tell us about that?
I would love to, and I guess I thought it was clear because they were not talking about me to my extent. I think there was some other guy named Marcus on the committee, but it was just, I mean, I just thought it was downright funny because they're saying, and Marcus did this, and Marcus said that, and then everyone votes on. So I just decided to name it the Marcus proposal. And hopefully that's clear. I guess I got a few comments. People were confused. No, I haven't heard a damn thing back. And here's, how come they tell me, they can't even tell me if they've gotten my evidence, yet they're talking about voting on market structures with Goldman Sachs, HSBC, Citadel. I mean, that's a pretty heavy, you know, felony list.
How do brokerage houses get to vote?
Because they're the same ones that rig the market. So I used to wonder, I couldn't tell.
That's
like,
the point.
CFTC,
That's why I asked the question.
Are they a bunch of idiots, or are they the cop that's being paid off? And you can go to YouTube, type in CFTC, February 23rd, 4.5 hours, and you can see at minute 2 hours, 37 minutes, you can watch the banks that pay the fines vote on the policy to create the market structure that tamped it down so that when people go out and don't cheat, so your customers that went and started a business, live honestly, they don't beat the shit out of people or steal from them, they go and they work and they pay taxes and they overcome the inflation. And that's why it's able to keep going, because the human spirit is always, that's my belief, that we, even as I mean, 99% of the dollar is eaten, another half of that taxed away, yet it still overcomes. But it's set up, and this is what they did to the constituents that Ralston Benham swore an oath to protect. He screwed them, and he got caught screwing them. And then I asked the questions. There's already $30,000 pledged that would have gone to support the victims of child trafficking had he just answered the questions. The man went up there, talked about transparency. He won't talk to me. I haven't heard them explain how the price falls like that, but I wrote it down for him. He can't talk to me, but he can vote on it with Goldman Sachs, who's the one that I caught doing the crime. So, next question, please.
Dave, Jim, Denny?
I'm sorry, I didn't mean that to be rude to you. It was more my, like...
No, not at all.
And actually, if I may add one thing, I've spent a lot of time, because I, had a lot of negative energy, depression the first 40 years of life. Most of the time, I didn't even want to be here. So I know the cost of that. And I know, and I've spent the last decade reading Dale Carnegie and positive thinking, and so I don't say these things lightly. I don't know, maybe I'm at legal risk. Some people say, Chris, you walk around, you're saying these things, you don't carry a gun. I mean, but what, at some point, there's right or not, in my opinion, and at least, okay, it's not a physical crime, but it's like the equivalent of like the guy's like shooting everybody up. At some point, I don't know how to say it nicely. I tried that. But what I find ironic is that, and actually I'll tell you what I think is really going to end this silver manipulation. A lot of these people, in my opinion, as a kind of like an amateur, I'm not a legal psychologist. I study and read a lot of wacky stuff. You're dealing with people that are sociopaths, however you want to define that, but that banker mindset of enough, hey, as long as I get my bonus, it explodes on the next guy's watch. Same thing you see in politics. They still just keep doubling down, and then they send Jeff Christian out to say the same thing. He doesn't realize people are laughing at him. He doesn't realize when he went on to Miles Franklin and said, and the guy knew he was lying, and asked him, so why should people trust you? And he said, well, I've been doing this for 40 years and I'm trustworthy. I don't know anyone I've talked to who heard that who didn't break down laughing. And he doesn't get that, and they're doubling down. And when people realize, amazingly, what is the real true Achilles of this fat, drunk Goliath? Humor. They're going to get knocked out by memes. Fine. I'll make songs about it. I'll write, whatever. Because it's so, all right, fine. They're going to, all they know is how to talk like lawyers. But people with common sense, the ones who actually see what's happening with the dollar and bought gold and silver because they saw their government was screwing them. And then now, the reason this went on for another decade, you killed the demand. Bill, Jim, you guys have talked about, I've listened to you guys for years, and that's how I learned it, where, all right, silver is volatile because, yeah, you can massage the, basic industrial demand, but hey, if everybody finds out the paper thing's a giant Ponzi scheme, then watch out. And that's what we saw. We saw it last year. I don't know, when the price shot from $18 to $29, did the price get tamped down there? Was the CFT, was Ralston Benham selling call options? Is
You
that
can bet
something
they
anyone's
were.
checking? I mean, Paul Pelosi, this guy, I thought I was around some good option traders at Susquehanna. I mean, it's one guy, a guy walks in, he drives Black Scholes from the beginning of time. Was lost, I didn't even know the notations after about 12 seconds. But here's Paul Pelosi. He's buying call options on Microsoft right before they're getting $22 billion contract. So what, the Army can buy virtual reality headsets. Okay. When does anybody care about it? I went to Washington. I took a trip there. Stood outside the CFTC's office. Called before I went. Called while I'm there. I walk past, go to the White House. Secret Service agents stand there and say, hey, I left Wall Street because I saw corruption. I wrote down the evidence, and there's Elizabeth Warren, Joe Biden, Nancy Pelosi, Clinton's, Bush's, every party. We're going to clean up the corruption. Okay, I can't even get anybody. You guys cared. You guys invited me onto your show. How come nobody in Washington even wants to talk to me? Or are they all in on it?
Because you're kryptonite.
Or is maybe that's the whole system? Maybe it's always been this way, and I'm just waking up to it now. But
all right, so you're at 50,000 feet. Go ahead, Dave.
Let me just make this mention. You mentioned the name Jeff Christian, and for anyone who does not know who Jeff Christian is, he testified in front of the CFTC. That's when Bill Murphy and Harvey Organ, and I guess Adrian Douglas. Anyway, they were all testifying in 2011, and Jeff Christian was the one who admitted that he was calling all the trading physical trading, but he admitted in the end that it was at least 100-to-1 paper versus real metal. That was the real that was a real bombshell.
Well, although I'm not even sure. I mean, it wasn't probably truthful anyway. I mean, the number's probably much bigger than that.
Probably bigger, exactly. Yeah.
Although it's
300, 500, whatever.
Keep in mind, Andrew Maguire had been sending them evidence for months, which they just ignored. They uninvite him, and I'll tell you, I think you guys, Jim, Bill, and Denny and Dave, you guys have all been doing this long enough. You don't need to hear me say it, but Andrew Maguire, the same, Bill Murphy, Chris Powell, the people who have stood up to this. I appreciate that you're inviting me on to your show, and just as awkwardly trying to say thank you, and the way some, like the Karate Kid says to the master mentor. That was the kind of thing that opened my eyes. It's like I'm closing my eyes right now. I'm picturing myself. I can see I'm on my post on the New York Stock Exchange, and I would be, flipping some options here or there, and then going back to read Austrian economics. And I remember, I was like, wait a second, this guy Maguire, he wrote all this stuff. Ted Butler writes this stuff, but they uninvite him from the meeting. I'm like, what up with that? So these things. So if anyone feels I've made any impact or done anything right, that's any takeaway from today. You don't need me to say it, or Jim, or Bill, or anyone to say this, but the stuff is there, and I think that's what is so incredible. And what's changing things is that other people they're getting past that conditioned fear that maybe that's what we've been assaulted with. And this isn't a financial exercise. This is the greatest hypnotic thought experiment in history, where everyone says, as well depicted in The Big Short, if you ask the question, they make you feel stupid. They want you to go away. They put Jeff Curry on TV, slap the Goldman Sachs brand on there, so you think you're too stupid and nobody asks questions. But now what I think is it's like a new sport, making meme videos of the things because once you realize what they're lying about. I mean, Bill, are you really confused, about what Jerome Powell said last month, or what he's going to say next month, or no? Well, I know the answer to that one. Jim, can I throw a curveball trick question? Since you went easy on me, you gave me a softball, but I'm going to throw I'm going to tell you a fastball up in your ear. We're going to throw a slider. You don't know. Can I try that?
Here I go. Yes, please.
So when Janet Yellen a week or two ago said that, oh, well, with the economy so strong, and they think interest rates are going up because people think the Fed's going to hike. But let me ask you this. When she said that she thought they might start raising interest rates sooner to stay ahead of it, did you start selling your gold? Were you panicking? Were you like, holy shit, this gold bubble's going to pop now?
You
Did you fall for that one, or are you kind of good on that?
I'm kind of good on that. Okay.
And when you see through
the biggest person in the world,
and it's like the same. So people have been reading through the Fed whoppers, thanks to folks like you, and it's the bullion thing is no different. See, here's a fun quote I just pulled up from the LBMA's report. This reflected two key issues: ongoing and heightened risk concerns. New York Bank's risk departments, they're talking about February, the Silver Squeeze weekend. The bank's risk departments continue to limit the ability of their trading desk to issue contracts. This had the effect of tightening their supply of contracts, not metal, and kept futures prices higher for longer. So they just basically said, the bosses were scared shitless, as the LBMA acknowledged, so they told them, like, hey, stop shorting the shit out of this. We're going to get the fucking whole thing blown up. The price goes up once they stop shorting. Oh, go figure. The price goes up. Rostin Benham told you. The LBMA told you. You can watch their own the video with March 18th, Rostin Benham, where he talks about it, or you can watch the meeting where they set the policy. But they won't talk about it to the public. They won't talk about it to the guy who can explain it. I've called iShares. They can't find the audit. They can't explain it. I've called Goldman. I call these places. At least I'm fair. I tell them that I have a show. I report the evidence to the regulators. I publicly accuse you of fraud. Do you want to comment? Would your lawyers like my contact information? Jim, I have actually started recording them. I'm waiting to get clearance from a lawyer because I call and say, I mentioned I'm on a recorded line for quality control purposes. Is that okay?
Exactly.
So I think, but I'm just waiting to make sure. Cause, hey, I want to do everything. I don't want to be a rule breaker like the CFTC or the banks. So I'm making sure I do things right. But here's the best part.